All right, fellas.
Yeah.
It's our first podcast here.
I know, exciting.
That's crazy.
Yeah.
So, basically, we're all kind of, if you play in the NFL and you've played for over 3 years, you're a veteran. Me and Tommy are like Tom Brady of this industry. But
Goats.
you guys are both considered veterans because you're over 4 years.
Oh, yeah.
Yeah,
6
so
years.
I'll start with you, Spence. When did you start? How'd you get in? Tell your little story.
Yeah. It started with you guys April 2018
Yeah?
back then.
Yeah?
And-
How'd you get in?
Right.
How'd you
Oh, yeah. So I was working with Sprint before Sprint became T-Mobile.
yeah.
Um,
I had some buddies that did something for T-Mobile. They were indirect dealers for them for a while.
yeah. Yeah, basically, can't have a T-Mobile and Sprint on the same side of the street.
Yeah.
And basically from there, they shut the doors down to my store and lost my job that way. Been trying to get in with the locks changed.
Yeah.
And,
What made you think about coming to mortgages?
well, we had a buddy that was working with you guys, Austin.
Austin? Yeah.
Yeah, back then. And then basically the same day that you guys offered me my job, I got a call from T-Mobile saying, "Hey, we want you. We're ready for you now." And so I was like, "Okay, go back to what I'm comfortable with, or leap of faith, and see if we can try it out and kind of go more high risk, high reward,
Nice.
and haven't looked back."
Yeah, when you first came in for your interview, everybody's wondering if you could hire someone under 18.
I was gonna say how old is
Everybody's like, hey, are we going to hire that kid? I thought you have to
Right.
be 18 to be a mortgage guy.
Yeah, I think I was 22.
Yeah, but you
when I
look
got
like
in.
you're like
Yeah, but I
13
look
and
like
a half.
I look like I just graduated high school.
That was awesome.
Might
There were
still
so
be
many
it.
times, and then my one buddy was like, is that kid,
So you're
is he
28
old
right
enough?
Yeah.
Yeah.
Wow.
No doubt.
Yeah. That's right.
Oh, it's going to pay off when I'm like 60. I'm gonna look like 40.
Yeah, it is.
No, but yeah, that was the funniest stuff. Yeah.
Yeah.
And then he got to see the picture, and he was wondering crazy stuff because me and Todd have this crazy picture that's behind us.
Oh yeah.
And he was wondering crazy stuff. He was that picture. It's the worst picture ever. Oh, God. It was
Like
terrible.
funeral painting.
Yeah, it's like a funeral pain. Looks like me and him got in a
Yeah,
car
it's
accident
like-
and died together. Yeah.
Oh,
It's terrible.
it's right there.
It's right that one over here?
Yeah, it's right behind you. It's terrible. Spencer was like, what am I getting myself into? What do they have a picture like this for?
Yeah.
Oh, it's pretty funny. Yeah, it was awesome. And then you got in with us.
Yep.
Yep.
The multiple companies we've been at.
You started as a loan officer, though. You didn't start as a business developer, right? You
No,
went directly
no.
into being a loan
Straight
officer.
to
yeah.
loan officer. Yep.
Yep. Most of that back then was a lot of call center stuff.
Yeah.
A lot of lead-based stuff, right?
Yep.
Yeah.
Yeah, I remember my first day, just hopping into Ytel for the
Yeah.
first time.
Remember
Yep.
Ytel?
Yep.
That was
Grinding
crazy.
their
We don't
calls.
use that anymore, but that was wild.
Yep.
Wow.
Yeah. That was
Yeah,
when
we-
power dials were the thing.
Yep. Yeah. The first day, I wasn't expecting to get on the phone, and then just boom, put the headset on, rip the Band-Aid off, and then
How'd your first call go?
it went great actually.
Yeah, I think you had success on your first call,
Yeah,
right?
one of the if it wasn't the first, it was one of the first. Went to go to do a live transfer, and no LO was available at the time. And I didn't know what I was talking about or what I was doing, and basically, Austin sitting next to me, he just wrote on a piece of paper real quick like the information together, and he's like, "Just get it." Just ran an app, and then at the end of the call, I was like, "Okay, I'm gonna have someone call you back. Stand up," and I'm like, "I got one." Got one who wants it.
He got to experience this when we had nice offices, Tommy.
Right.
We had a really nice office.
Where's the office
These
at?
Herman Miller stand-up desks, you know what I mean?
Oh,
He
yeah.
didn't get to experience us at the worst.
Oh
Yeah,
yeah,
we used to have some terrible offices. But yeah, we had it was
it was a Fairview office.
Yeah, it was a nice Fairview office. It was all glass walls. It was pretty cool.
Mm-hmm.
Dan, how'd you get in, man? Tell me your little story.
I was in collections, and my brother is talking to Fish. He lives with next to Jeremy. They own Nations Lending. Sopco, yeah. And he was talking about mortgages and how they're making good money and this and that. And I just jumped on board. Got my license in 2018, kind of like Spencer.
Yeah.
I've been rocking and rolling ever since.
Yeah. How'd your first day go? I mean, you were already calling people, and people were already telling you to
Yeah.
beat it. But
Oh,
you were a call
yeah.
center
I'm
based when
not,
you started, right?
I got thick shoulders, so it don't even matter. You know, I think
You've been doing it for a while, though.
Yeah, people have been telling me F off and all that good stuff on
Yeah.
the phone with collections and stuff. So whatever, man. Like, you know,
Collections is the worst.
I have no problem being
I'm
on the
assuming.
phone and stuff. So yeah, it was interesting. It was cool. It's fun. It's been a game changer. I really enjoy it. I enjoy helping people.
Yeah.
I was at Liberty Home Mortgage.
Okay. Yeah.
That's where I started there. That was fun. You know, got to working underneath this guy named Max, and I was taking apps for him and stuff because I wasn't licensed. I was as a junior first, and then got my license, and then started originating.
Awesome.
Yeah, bilingual, so it's a little different. I'm actually liking using it here. Yeah, no one really took advantage of my bilingualism other than here at American Pacific Mortgage, so it's kind of nice.
Okay.
Yeah.
Yeah.
No, I almost had one that was like, worst case scenario, I'm gonna have Dan help me out with.
100%.
Yeah, Dan, you're bilingual. You speak Spanish, right? Yep.
I speak more Spanish here than English.
I was about to say you speak Spanish like all day here.
No, I
It's
know.
hilarious.
I've been sending this dude doing Google Translate on my emails just back and forth with this one guy.
And it works.
Now I'm calling his dad, because his dad can translate. But yeah,
I can help you out if you need to.
Yeah.
worst
Yeah.
case.
It's awesome. And then we got a couple link loan. We have a link loan that helps out a lot if you're undocumented. So we have a great product for people that, do come over and do speak Spanish and don't have the ability to speak English. And we have a loan officer for them too, which is cool.
Yep.
All right, Tommy, you're up, brother. You're the oldest one in the pen.
Yes, I am. Yes, I have
And
a
the
similar
oldest in
story.
the business.
I have a similar story to Spence. I was appraising first, and then
Oh, you were an appraiser 1st I didn't know that.
you had to get 2 years under your before.
Yeah,
you
2 years apprenticeship. Yep.
And while I was doing that, a friend of mine worked at. It was called United Companies back then. United Companies Lending. It turned into UC Lending.
UC Lending. Yep. Remember that?
But I went out and we business developed with brokers back then,
Okay.
and I couldn't read a credit bureau. I had no idea what it looked like. I had no idea what I was looking at.
So you were
I-
working with brokers, like going to brokers'
Yeah.
houses or brokers' offices? Yep.
Yeah. I'd show up and they'd throw deals at me. They'd throw 1003s at me and credit bureaus. I had no idea what I was looking at. So I'd sit there and look at it and go, yeah, you know what I'm going to do? Take this one back to the office and I'm going to have my manager take a look at it also. And then we're going to get back with you. And I just go out and talk to them about anything.
Yeah.
And they'd give me deals and I just take 10 of them back a day. And his name's Scott Miller, actually. And he would say, yes, no, yes, no. And that's how I got started. That's how I did it. And then they went under.
Of course they did.
Yeah.
There's a slew of people we knew that worked there.
Oh yeah, I was kind
Like
of
a lot
Scott
of
Miller
the
was the
people.
first, and then
Yeah.
he got me in, and I got a lot of them in.
Yep.
So yeah, it was. There's a lot of people that are still around right now.
Yeah, they're doing well.
They're doing well, whether they're entitled, what have you.
Yep. Yeah.
So that's my start back then,
Yeah.
and then I've been around ever since.
Yeah.
So
You've been in mortgages since then, right?
yeah,
When'd you start?
Credit. I think it was '96.
Yeah, he's been in it forever. He's in longer than
96,
Todd.
97.
Yeah.
Yeah, yeah.
That's in '99.
Todd was 99. Yeah.
Yeah.
Yeah, it was definitely. I've thought about it over and over. I can't really remember, kind of. Yeah, but I remember. I was in an office in Beechwood. I could probably find out because we weren't licensed back then. So it
Yeah,
didn't
you didn't have to
matter.
get licensed
Yeah,
back
you
then
had
when I
no
started
idea.
either. Yeah.
But in any event, it's a long time.
Yeah.
Yeah.
So I remember my date. My date was January 14th of 2002. That was the day I started in mortgages. So it's funny. A lot of the guys that I worked with, because I started, I was bouncing out of college. A lot of the guys I worked with all worked with you at UC Lending.
Yeah.
So I had like a lot of buddies I was bouncing with, and they were all making money. And so I was like, all right, if they're doing it, I should probably get into this eventually, right? And so I had another buddy that I was friends with. He got into it, and through him, I met the guy that owned the company that Todd worked at and that I started at. I know they got into like a fight with some kid, and they ended up going to jail. But before they went to jail, I ended up starting at this company. Yeah, it was crazy. But I went to one of their parties, and that's how I was like, all right, this is it. So all my friends were starting to make money. I had one buddy making a ton of money, and then so I was at a party with them, and then it was all these young little kids who are friends of ours today. But they were all, at the time, they were younger than me. and they were killing it. I mean, they were buying huge bottles of champagne and partying. I was like, all right, that's it. So then I started that in the first training class in that new office that they got at this company called the Mortgage Zone, which wild company. It was wild. Yeah, you were there.
I was there.
Yeah. And so I started there. Todd was a manager. And there's a couple people that we work with today, like Todd Rose, that just started. He was a manager. There was like a bunch of managers. So I just started working there. That's how I got in there.
Did you know Mike and Gary Habib?
So I didn't know those guys. No, I didn't know any of those guys personally. Everybody heard of them. They were huge at a point.
Yeah.
Right. That company, the Mortgage Zone I started at, was like a big call center. It was like one of the first call center groups type of thing.
They were
Yeah, we just did massive call center, 60 to 70 loan officers, a huge call center called Smart Choice Marketing. They had like, oh man, they must have had like 40 different telemarketers on 2 different shifts. So they had like probably 80 to 100 telemarketers in that place, and they would just feed us leads and feed us leads and feed us leads. They get socials and everything, and then we just call those leads back.
I can't remember live transfers back then.
So they started to do live transfers at the end, but at first, because that's what Todd Rose handled a lot of, is he would he'd print out the leads and give you 5,
Right.
and the good guys would get 10.
That's right. Yeah.
Yeah. It's funny. The room they put us all in when I first started was they called it the Players Pit. It was me, Jason, this kid Danny, Derek, which then became this kid Gary, and then another kid Eric. So there was all of us in this little back area, and then everybody had little pods. You weren't there yet, and then you showed up later on. Yeah, and you tried to do that. You and Dennis started that purchase division, right? Yep, that was pretty cool. But yeah, that's how I got onto it. It was crazy, and then of course, I've been in it ever since. Yeah. So Spence, what do you think the biggest transition you've had so far in mortgages, like in your process or stance or what you do? What's one thing that triggered you to do better? If you had to think about it.
That's a tough question.
I mean, because you've come from just doing lead-based generation to now
So everything
generating
was
leads
transferred to you
yourself.
back in the beginning.
Right.
It was all live
I
transfer to
guess
dial outs. So these guys were cold callers. Like my historical has always been the loan officer cold calls, right?
Right.
And they get leads. So it's a double-edged sword. So like if you want lead, you have to call. It's always been the way we've done things until recently, transitioned completely with, AI and all the stuff that's available. The loan officers don't have to cold call anymore. But when my entire career, from when we were at the Mortgage Zone all the way through, you can call these leads, but you're still calling them. And then the other way you make money is you take old leads. They put
That's
that
it,
old lead box. I made my money doing the taking the turn down box, right?
Back then,
Yeah,
you made more
right.
money in the old leads because the original loan officer sucked,
Yep.
or
Or less calls.
the customer was in a different part of life.
Yep.
They weren't ready to move forward. So
Yep.
it's just a matter of they were thinking about it, but they weren't ready, and then you caught them when they were ready.
Yep.
Right.
Yeah, like I made my money and did my stuff from the turn down box.
Right.
So there was so many lenders and so many products. There was like 900 different
Back
products,
then,
and there
it
was stuff that you didn't
literally
even,
a box, a cardboard box with
Right.
paper leads in it. You go pick up.
people put the files in there. I'd go to the
Yeah.
box with the file. I'd go to the files,
Right.
get all the full files.
Yeah,
didn't
you guys
close.
had
Call
boxes
those people
full.
back.
boxes.
Boxes.
Wow.
This is 2002, so there's be a huge box of loans. At least when I was there, it's probably younger than him. Well, it's probably different for him. But by the time I got, at first it was like one computer. Like there's one computer. That's where you print all your 1003s. Everybody in the company used it. Then we had, at least at the Mortgage Zone, we all had one computer and one monitor. And then you would take everything, put it in a file, and you give it the processing. You'd literally give a file full of the borrower's
You'd
stuff,
write
left
up-
side, right side.
Back then, it was non-conforming still, so there was all
Yeah.
kinds of
Yeah.
different programs, and you write them up and take them to Chris, and then he just write out. You go back.
So you would,
call the
and
guy.
people didn't realize that, like, one, of course, credit could be fixed.
Right.
Credit changes, so you can repull credit, could be better. But then there's all these little small lenders no one ever heard of that did crazy products that no one knew about. Everybody knew the Wilmingtons, the Decision Ones, the Countrywide Loans of the Year. But they also had some small products people didn't know about. You know what I mean? And same thing with these other
They'd
lenders.
come in the office, and you just now. I had that job at one time. But they just handed me the
Leads.
file,
Yeah.
and then I just took it and then paid them. Because they found us.
Because they couldn't do the loan.
They couldn't. We did the loan for them, but we did everything. From
UC Lending
1003
did like
on.
the C paper.
Yeah,
And
we
the
did,
D
yeah.
paper. You know what I'm saying?
Well, Subject 2 was really big. So
Subject 2 was real
the
big.
loans did Subject 2, so the home improvements.
Yep.
Like if I live in a house in Cleveland. and subject to remodeling the kitchen or the siding or roof that no other lender would touch because
that was the one thing that was crazy is we would touch someone if they foreclosed yesterday, but if your house is subject to, there was like 1 or 2 lenders max. It was wild.
Really?
That I had at my fingertips. There wasn't a lot of lenders that were doing subject to, but Decision One would do a guy 500 credit score, 100%. It's like, why would you do that, but you won't do a house that needs repairs? It was wild.
somehow
That is kind of crazy.
Yeah.
that,
So that when you're the subject to guy,
it was crazy.
you get a lot of
times, though.
business.
You
Yeah.
showed
Oh, I'm
up-
sure.
You showed up with a disbursement check, and you look at the work, and I'm no carpenter, except I'm crystal clear. A roof's not supposed to look like that. Or the wall's not supposed to look like that. And the consumer, the borrower, is there. Tom, what is that? Tom, do you see that? We're gonna pay him for that, Tom. And then this guy over here gives me business, and he's sticking his hand out for a check. I couldn't do it. I'm like, no, you gotta
Fix
you gotta fix that, man. Sorry, because the consumer, I care less. I'm about the consumer, so it doesn't. To me,
Yeah, it was
I
wild
could tell you
times.
funny stories about that.
Yeah, it was wild.
Yeah.
Yeah, so I made mine in the turndial box. That was it. So I grabbed the turndial box, and then when I wanted to be a manager, I grabbed like the guys that were just not doing very well. I think one guy slept in the van in his car, slept in the van in the parking lot. If I've told you that story, he was homeless and he slept in the van. They would hire anybody back then. And then the other guy was like, he was an older gentleman, really nice guy, but he had no mortgage experience and he wasn't doing very well. So I would just take those loans, restructure them, be like, here, just call the borrowers and get these going. And they were lay downs because these borrowers were told no by everybody.
Yep.
And then I took those guys and they did like 20 million each in fees. We did fees back then. Not
Fees.
So you can't charge fees anymore. But
Yeah.
back then, like
It was all fee based.
we were 10 points on every loan.
Yeah, it was when you started. When I got there, it was 7.
Wow.
Jeez.
And then it just
Now
changed
property
from there.
values weren't
Yeah,
as
it
high
was
as they are now.
Wildly different. Yeah.
So you're even
It's
your
still
suburb
probably
house was
evens out now.
$175,000 house, and then so it's, don't get me wrong, still 10 points on that, but it's not on 400,000.
Right.
Yep.
Yeah.
What made you transition? You're less call center. You're more.
Yeah. I mean,
What do you think that step was that made you realize that this is your path, building your own business?
I mean, just I would say like where we went from the lead based, doing the cold calling,
Yep.
and trying to drum up business that way. I mean, just from the transition of like how much more expensive that became, and less that they were coming in, and the quality started, you could kind of see it diminish, and just being like, okay, this might not be the best way. I mean, we were successful at it, but it was kind of like, hey, why don't we localize, focus a little bit more on Cleveland and build a reputation and
You've been doing really good at that.
try to get
Really building your brand and
yeah.
getting a lot of
using
deals
word
now.
of mouth.
Yep.
Yeah.
It's funny you talk about that box because we go to them and we literally
It's funny.
we would you go in there and there were deals in there that the consumer didn't even know. They were told no.
Yeah.
By everybody.
By whoever touched it. It's just very similar on the purchase side now because we come from that background.
Yep.
Right.
They're told no. I've seen 580s that in fact I had one.
Yep.
Put $8,000 down. I'm like, why don't you take $400 to pay this credit card down? Now you're $640 or something stupid like that. But if you're just doing purchases your whole time, they have no idea.
Yep.
We used to literally take a consumer and make a loan out of them.
Yep.
Not the other way around.
Yep.
I think that's one of the biggest skill sets. So a lot of people are like, oh, when I was a kid growing up, you were only supposed to play one sport. Like play one sport, only focus on one sport. You'll get no other skill set. And now you look at it now, and it's like if you would have wrestled, you'd have been a better football player because wrestling helps with your base. If you'd have played other sports, it would have helped you all across all sports.
Right.
Same thing with being call center. It gets looked at like, oh, you just a call center guy. But the truth is that call center skill set gives you a lot more skill set than the guy that is not a call center base.
And
Like
the
if you don't have
reality is
if you have a wrestling base, you're a better football player.
Oh, yeah.
If you have a call center base, you're a better loan officer.
Oh,
the
yeah.
reality is we helped people. They
Yeah,
didn't know
right.
they were looking for help.
Right.
Don't get me wrong, the product, the 327s and stuff like that, that's just all that existed back then.
Yeah.
It wasn't the loan officer that was providing that product. That was Wall Street that was providing that product.
Yep.
Someone's buying those securities. So in any event, but without that call center, all those people don't get helped.
They don't get helped at all.
Because it's not taught.
Right.
So
Yeah. I would say even
In the end, they might have been annoying. They got a phone call, but in the vast majority of people, you actually helped.
Yeah.
You know.
Oh, yeah. Yeah, absolutely. I mean, that's kind of the way we go in it.
So what's the lowest credit scores you guys did back then?
Oh, back then?
Yeah.
500.
500.
Yeah.
There was some that would go below 500 too.
You would see, and even not up until that long ago, you would see.
620 was a good score.
But yeah, oh yeah.
Yeah, it was a really
You would
good
see,
score.
well, the scoring model was a little different too back then, wasn't it?
It was
wasn't
completely
calculated
different.
The same.
Yep.
But you would see a 540. They made all their payments. They just everything was maxed out. Got a divorce, husband died, wife died. Life smacked them in the face. Now all of a sudden they still got kids. That doesn't change.
Yep.
Losing income.
Yep.
That type of thing. So you're able to take that person and save them, $800-900 a month.
There was a couple loans that just never been made. The
that-
125,
That's for sure. Yeah.
the 115s,
Well, that's again, it's not
the
it's not
100%
consumer.
cash outs, right?
It's
Those are
not
the
the loan
products.
officers. They're making. Someone's buying that product.
Yep.
Someone's buying that paper, and so that's why
We didn't know.
Then
I mean, at the
2007
time we were
came.
kids. If we knew, the only one loan that I knew was a bad loan that I never did. One, we never did many arms.
Right.
So we've always done the fixed rate version of it. We'd call and be like, "Hey, make it a fixed rate." Well, it's going to be a higher rate. No, give me the same rate for a fixed.
Well, they didn't.
And they
read-
would do it
didn't
because we
read the
did
note.
volume.
The arm itself was.
The arm was.
It had a margin.
That
was
was just
6%,
6%. Yeah. And you didn't. But that was the thing. We didn't do many arms, which is good. But the one loan I was going to say that was a loan that I just knew was dirty, that a lot of people made money off of, was the pay option arm. The pay option arm was the worst product that they've ever invented, and it was a big issue in our industry, and a lot of people abused it. And we didn't do any of those. At least my team didn't. And then when we
I
started,
can't tell you how many people had no idea they signed a pay option.
correct, yep. And then when we did our one company, which was a branch of Allstate that then became Anthem Funding, we did no pay option arms. Pay option arm was a dirty loan. It was basically you have 4 options. You could either pay a 30-year mortgage payment that they'll send you, 15-year mortgage payment that they send you. You can pay the interest-only payment, or you could pay a 1% of the interest payment, which would then put your mortgage backwards. So
It's
if
a
you paid
reverse at that
1%, you would tack the difference between 1%, and let's say your rate was 8, it would tack the difference of that 7
That
points on
7%
your
would-
balance.
would
Yeah, and then people
increase
would
on the
sell those
balance.
and be like, "That's your payment. It's fixed at that payment." Selling them
The
as
consumer-
1% payments,
Yeah,
these
the
consumers would
consumer
think
had
that
no
was their
idea.
payment.
Yep. So it just snowballs
And you
into
tell
a
them,
larger loan.
and you actually tell them. Funny is I highlighted their names that they signed on the note. Those notes, by the way, are filed public record.
Yeah.
So you can
Yeah,
get
you can just
signatures
pull them
and
right
all.
online. Yep.
So back after the meltdown happened, I literally printed them all off from public record and highlighted their names, their own signature, and mailed it to them. And they'd call me yelling at me. That's not mine. I was like, is that your signature? I mean, that sure is your loan. So whatever they were told by some whatever, the reality was
That was a
that's
marketing
your
too.
signature.
Wow.
I wouldn't read that note, and because I would highlight them in the note, I'd highlight the main stuff.
That was a whole
I mean,
marketing.
it obviously
we-
wasn't explained to him
That's how I
correctly.
did.
Yeah,
that's-
100%.
You know?
Yeah.
Somebody said to me, "The house is on fire because of the meltdown. You're running back in." I said, "Sure I am." You know what I mean? Because I know what these people signed.
Yeah.
And
That was
I would tell them. I actually had a conversation with the lady. I told her, "No, I'm not going to make this loan. This loan sucks for you. Well, if you don't make it, somebody else will." I'm like, whatever. It's my job. Here's your loan.
Yep.
I explained it to her though. I'm like, even not that she had any idea what I was saying, but I explained it as much. As better, as good as any human being in the industry.
Yep.
But they would. Humans can't be humans. Can't get out of their own way.
Yeah. That was a marketing. We'd mail them notes. That was the way we marketed too. When FHA Cash House became big, we sent them their notes.
Yeah.
So they would know, okay, this is what I signed. You'd pull the notes down and
6 or
you'd send it to
7%
them.
margin. Some of you
Yeah.
guys know what a margin is, but on an
Yeah.
adjustable rate, the margin is the fixed part. So if the index is moving up and down, okay, that's so. But if the margin, for example, conventional margins are 1.75.
Basically, yeah.
These are 6%, and it said in the actual note, your payment your rate can never go below the initial rate.
Yep.
So they sold them on an interest rate that was adjustable, and hey, it might go down, except it says in the note.
Yeah,
it
but
can't.
it'll never go below it.
No, it says it in the note. It cannot.
Yeah.
And then, I got so many funny phone calls. People yelling at me like I'm the one that did it to them. Man, I just showed it to you. I didn't do it.
Right. Yep. Just this as a last ditch effort to get you out of it.
Yeah. It was wild. Yeah, it was a lot of bad loans done back then. But I mean, we all know that. I mean, look what happened.
Right.
But again, we didn't know. I mean, we were just selling loans.
It's not the loan officer.
It's
It's
Wall
the
Street. Yeah,
investor.
they
It's
created
Wall
it.
Street. They created it. Somebody buying that security.
Yeah.
So that loan doesn't exist. The loan officer doesn't have that product.
Yep.
Right. Right. Yep. So Dan, what about you? What was your transition, you think? The biggest transition you made in your career? Do you have one, you think? Starting to use your Spanish?
Yeah, just using my Spanish more, just taking advantage of my
skill sets.
Yeah, I like it though, because I like helping it, being able to help people out, whether it's a disconnect with.
Because you think about those people don't get
stuff.
very much help because
No.
Well, even
most of your loan officers
yourself,
don't speak Spanish, and then there's
yourself.
that.
If I went to another country, I'd want to speak with
That
somebody
language.
that speaks my language.
Yeah.
You know, just comfort zone, regardless.
So.
And then you know
was-
that person cares about you too. If you know what I'm saying.
Yeah, and that's what. Yeah, I do care. So like, I just want to help people out. Not take advantage of them, just help them out. It makes me happy to be able to help someone out that don't think they can get where the end result was or can be, and helping them guide them to get there. You know what I mean? So that's what I like, because I see my mom being taken advantage as
That's
well.
about to say that.
It's
yeah.
almost
You know,
built in. It's hard to take advantage of somebody, except for your own ignorance as a loan officer. You know, they're doing something, and then all of a sudden it doesn't happen because of what the loan officer did. But I guess I go back to like the '90s and stuff, where taking advantage.
It's
of somebody
easier to
was-
take advantage of it back then than it is today.
it
but
was
yeah.
fee based. You know, so the fee based versus now you can't charge. It's Equal Credit Opportunity Act. which
Yeah, but
has
it
been
could be
around
putting
forever.
someone in the wrong. So what happens is in today's world is people put people in the wrong loans.
program.
That's the wrong programs, the wrong loans, and they do it most of the time, like you're saying, because of their own inability to
Correct.
know what program to put them into.
Yes.
But there's also an instance of some people just only put them in certain loan programs where it's like, I can't do that loan program, so I'm going to put them in this one. Where like, you know,
Or they don't have it. You know,
they
so
don't
again,
have
that's the
that
bank they work
program,
for.
so they're going to stuff them in that. You got it.
Yep.
I have one right now with credit union, and he's got the margins like 4% on an adjustable. I'm like, did you read that? And they have no idea what a margin is. Listen, I go in the kitchen, I have no idea what a lot of things
Education's huge.
are. You know
Yeah.
what I mean? So I get it. You know, we do this every day.
Yep.
You know, so I couldn't work on my car.
You're like,
You know,
I can get taken advantage of by
Right.
all day long.
Yeah,
If
I
someone
just
wanted
say
to take
yes.
advantage of me by
just
that
pull it and
fixed
say
cars,
yes.
I'd be screwed.
You need this. Okay. Thank you.
Yep.
Go ahead.
Go ahead. Have
You
no
say
clue.
Right.
So I know how they feel, right?
Right.
Yeah. But you, now how about you, man? You transitioned a couple times, man.
Yeah.
You went from call center to purchase based, to call center again.
Yeah, and then lead generation, and then
We'll get into that. That was crazy.
Yeah.
That was crazy.
And then now here, I actually like it. You know, it's interesting learning this side of it. You know, again, coming from
Call
where
center.
we came from,
Mhm.
you know, call center based, to this now, it's you know, it's just, it's the same thing. Humans are humans.
Yeah. If you care about people, you'll do a good job.
That's it,
That's
you
it. If you care about people enough to say, okay, I'm going to do whatever I can to make sure they get the best loan, including raise your hand if you don't know what to do.
Well, that's the best part. The biggest part is that people don't do that, and that's a problem.
Yep.
You know, they get a question asked them, and it probably used to drive me nuts. And they'd answer the question. I'd hear the answer they said, and I'm, who told you that? That's not how that works.
Yep.
That person on the other side of the phone, they're believing every word you just said
Oh yeah.
because you're an expert, but you're not.
The hard part, though, in most offices, they don't have anybody. And they have to go
They
to
don't
the,
have anybody
what
that
is
can.
considered to their eyes the enemy, which is the operational staff that are looking to protect the bank to ask those questions.
Yeah.
And so it's very difficult. As we all know, as the operational staff has to decrease and the volume starts to go up, they're gonna have issues getting a hold of those people. So if you don't have someone on,
And if
on
you don't
dial,
know, say, I don't know, but I'll find out.
There you go. That's what I learned.
Exactly.
That's what I learned early.
Yeah. And then, by the way, then you actually learn it.
Yep.
And then you know.
Yep.
Versus just whatever you think
Winging
it
it.
is. You know, because that's dangerous.
it's probably most people learn that though because they don't have someone that's going to help them. That's a learned action because they don't know who to go to, and if they
Right.
need help, most people don't have someone to turn to be like, all right, here's something real simple. Because I get it all the time when people ask me questions, they're always being real apologetic, and I'm like, man, that's not normal. So that she
there's a lot
learned,
to
or
know.
he learned to do
Right.
that because the person that they were asking the questions weren't very helpful. So that's I think that sometimes that becomes a learned skill because there's just no one available to help them.
And then, you know, people in this news site, at least today, I'm finding, you know, people's perceptions because of X, Y, and Z bank. You know, they must
they work.
They must know what they're talking about. And I'm, don't assume that. At all.
Yeah.
But there's good people everywhere also. But there's also, I don't want to say bad, but inexperienced, like you're saying, that have not touched enough files to know things.
Doesn't mean they're bad people.
Yeah,
It just means they're just
right.
inexperienced, and then the people run them they're experienced. So the answers they were given were incorrect. It doesn't
Right.
make them incorrect or bad people. They just didn't know.
Right.
You know what I mean? If Dan started to have an appendix burst, I would do the best I can to save his life, but I'd probably screw it up.
I do it by.
But I'm
Probably
doing it. I'm doing
Again,
it.
I don't know.
I'm doing it because I want to.
I don't know how to do it.
It's
so
not
I'm gonna
because
call
you want
someone
him
that
to.
does.
Yeah,
I
it's
don't
because
know.
The smart person, exactly.
You're just ignorant
911, he's
to
on the
how
phone
to
board right
handle
now.
it.
Yeah.
But the,
What do I
the
do?
person, the smartest person, is going to call somebody
That's what I'm saying. Right.
that has that they know will be able to have the answer. And sometimes people don't do that. You know what I mean? Instead, they'll try to
Or
save
even try to
Dan's life.
investigate themselves. You can. I mean, now
Do the best.
Kill
back,
Dan.
back in the day, we didn't have the internet.
100%.
You know, especially didn't have the internet you have now. Even when it was.
Well, that's the
its
other thing I was
infancy.
going to bring. The hard part is like what we learned to be call center people, and I've noticed in any type of situation is phone calls are way better than text and emails. Way better.
Always.
Way better. And so we were born on phone calls. We didn't have the internet as easily accessible or people responding to emails as much as they did. You had to call somebody. So like if I wanted to know if a loan would work, like if I took one from the turn down box, I had their little flyer, and then if I want to know if this one fit, I'd have to physically call the rep and talk to them. Nowadays, people want to send an email and sit back,
Or text.
Yep.
or text and sit back,
Well,
and
that's
you
just-
don't get a
that's
good answer.
People
'cause-
being people. Right. Yeah.
But the issue is if you have a situation where you need help, if you do it through email or through any digital response, it's harder to get the correct explanation. For me,
and
to
your
respond to
interpretation
somebody-
of what you're reading.
yeah, because especially if the person you're reaching out to is like doing something, if you catch them in the middle of something, you're going to get a shorter response. I can give you the same response over the same time I can spend giving you a extremely detailed response over the phone, extremely detailed.
Yep.
If you call me, that I could giving you a mildly detailed response in email. So when it comes to that, phone calls are always I always tell people, don't email, don't text, just call the underwriter, call this person, call the insurance company, call the borrower. Because one, digital communication, if you don't put extreme effort into being smiley faces and thank yous and you're amazing and you're awesome,
all of a
always
sudden
get read in a mean voice.
misinterpreted, right.
Always get read in a mean voice.
Almost always.
Always. So I always say, call the person, no matter who it may be in the situation, because that's the issue is there's too much digital communication.
Yeah. I mean, you lose that human touch without it.
Well, and when it first came out, you hear people that's how they wanted to be communicated with. No, you don't really. You know, this you want to know what you're getting into. You know, so you want to be able to ask your questions when they come up.
Yep.
You know, so that was supposed to be going to be like a big thing, and then all of a sudden, there's too much to know on this side. You know,
Yeah, and you could use Teams or Zoom to do a
Right.
Zoom call because you
Right.
can still talk to somebody face to face without having to be on their face. And I get some people don't want the interaction, but if you build a relationship with your borrowers or with the underwriters, it's their next call you make, as long as you're not everything is pleasant and you have a good conversation on the situation, they'll be more apt to take your call and you'll be more apt to get a situation handled,
Yeah.
especially with the borrower.
The goal is, I mean, build the relationship to make sure that they feel comfortable and being able to pick up that phone and call you, where they're not like, oh, he's too busy or he doesn't care about me enough to where we're like, we're
It's an
just going to send
education.
him an email and he'll respond to me on Monday. It's like, no, call me on a Saturday.
It's an education. You
Like,
could be buying your
let's
third
figure it
house.
out.
That doesn't mean you
Yeah.
know what you're doing.
Well, I always use my brother because he's a surgeon as an example. How would you feel if you had to call my brother or you had to text my brother to find out if you needed hip surgery, and then he did hip surgery over Zoom with someone else in the other room doing it, like and then just giving instructions.
Or
Like,
on the other side, you've been to the
You know what I
doctor.
mean?
You've been to
Like,
the doctor
you go to
three
the
times.
doctor,
All of a
you
sudden
wanna-
you're a doctor.
yeah, you want to go
Yeah.
to the doctor face to face. You want to meet with them. There's a whole bunch of reasons I use it, but like you want to meet with your doctor. You want to feel comfortable with your doctor because if you feel comfortable, then now you feel you're more apt to take their advice, right? If you don't feel comfortable with them and they're real stiff and mean or they're digital and they're distant, you're not going to feel comfortable taking their advice. And next thing you know, you're going to take advice from someone that does give it to you, but they give it to you incorrectly, like
That's
your
what you
mom
say
or your
about the
sister
doctor.
or the internet.
So I'm the opposite.
Google someone that has nothing, there's no clue what's wrong with you.
I'd tell him to smack me in the face with it.
Yeah.
Don't sugarcoat it. I can handle it.
My brother, like I said,
Yeah,
my brother
yeah.
is
I
a
need-
pretty
I need to
well-known
know.
surgeon because he's a human.
Right.
He talks to people like humans. Like in most doctors, sometimes it's not like that because they're just so busy and they don't take the time to care for people, and then that's the issue. And I think that's one of the things that I think we pride ourselves on is actually caring for the people we work with, which is a real good thing to see in the team.
It's not.
Yeah.
It's not universal.
I would definitely agree with that. I would definitely agree with that.
Actually, taught not to sometimes.
I know.
Yeah.
Nope.
It's,
That's like
go ahead.
some of those things. We just try to do right by people. I mean, like some of the crazy stuff we do with the credit repair.
Yeah.
Let's talk about that a little bit.
Yeah, sure. So like, I agree. I mean, you're 100% right. You guys can talk about it, what you guys do, but I agree though. Like, some
It's
people
not
will
even
pull credit.
It's not even credit
It's
repair.
credit
anymore.
optimization. Yeah.
Yeah, I don't even
Yeah,
like saying it
'cause
because
credit
everybody
repair
thinks they
means-
know how to credit repair. Yeah, sure you do.
Yeah.
First of
Right.
all, you don't. And second of all, it's not that. Again, I always say it all the time. Take the 640, make them a 710.
You got it.
Yep.
So it's even if you got optimization is what we like to call it, because even if you have a qualifying score and the loan works, it's always better to get them a better
That's what I'm
score.
saying, right? Yeah, that's really
It's
what
like-
it is.
It's like,
If,
hey,
if
you
no
got
one
the-
knows, it's 780 like we
Well,
know.
what's people have no idea what this is, but 50 basis points on a $300,000 house, that's $1,500 out of your pocket because your credit score was 640, not 680.
You got it.
But I could have got you a 680 for $300 out of your pocket.
So
Crazy.
that's movers and
Now,
couch.
that's real money you're going to bring to the table.
Yeah.
So that's really, it's way more than that. I don't even want to say it on this because I don't want anybody to know that we do that because that's
Yeah,
kind
but
of
that's
the
something
difference.
a lot of people don't do because they can
Right.
care less.
Yeah,
They
it's
just
like, hey,
pull
we
the
get-
credit, you don't work, beat it.
Yeah,
Pull
it's
the
like-
credit, you don't
If
work,
I see
beat it.
another one that is actually moving forward with someone else and they come to me and they're 618,
Yep.
I'm like, what idiot kept you under 620?
It's like
The,
you're not
the
even
pricing
doing your
difference
job.
under 620 is gigantic. You can't even do it really sometimes.
So yeah, I mean,
Yeah,
don't
I
go
mean,
into
so-
detail because we don't want to let the whole world know
That's
our
what I
tricks
mean,
in the
right,
trade
yeah.
because we're really good at this.
Well,
but
no,
like,
but
why don't you speak about like you pull credit, you see the score.
yeah, I mean, if you pull credit on someone, you see the score. Let's say they got a 600.
Yep.
You know what I mean? Like,
Even if they have a
At-
700, right? Because
well, at that point, it's like, hey,
They
like
get a
rather
700
than
or
like,
740.
it's like, hey,
Yeah.
if we do this right now, I know you want to get in the house. Like you're telling me, like you're ready to go shop for houses. Why don't we take a step back real quick, take a month, and let's get you in the best position to be able to do so. So it's the most affordable way. Because like you're at the end of the day, like once I'm done with you, you're the one that's making the payment for 30 years.
Or
Like I want to
buying
make
less
sure that you're
house.
going to be in the best spot.
Or
to
buying
do it.
less house because you want to move forward right now.
Yeah.
So instead, and instead of the
Getting a worse
$200,000
deal.
house, buy the $220,000. It's the difference of what you want,
Yep.
and it's the same payment.
Yep. Tell these guys like every time you talk to somebody, and it's great for them. They find the ability, but there's never a point where it's like, all right, I just want this much because every house is different, right?
Yeah.
Yeah.
It's like even if they buy, I want to buy 200. Next thing you know, they want to buy 250.
It's almost
When they come to you at
every single
200,
one,
it's like, well, how many would you say? Almost everyone that is like they start at.
Well, I
one amount and they
understand
end
why.
up
At
wanting
least
to
I have
go
an
with
idea.
others.
I have an idea why is because they don't know. How do they know?
Yeah, they don't.
Somebody told them, or they read it here, and all of a sudden they get out there and start looking. Well, hold on a second here, and so they start to educate themselves on it. As that happens, they go up the ladder, and so
Yep.
I can't tell you how many of them are at the max debt ratio.
Yep.
Yeah. Even the realtors always want a higher pre-approval too.
Yeah, so it seems like it's because it's difficult
I don't
to
run
find
into
the
that as
house.
much because they don't. I give them the max.
Yeah.
And then depending on the taxes,
It's just tough
where
to
you
find
find
certain
it.
houses right
Right.
now.
Yeah.
Oh yeah.
It's tough out there.
So-
Yeah. It's just
But-
sometimes you get those price points.
Well, some
It's like,
communities
it's
you'll have-
impossible.
And then it just, what if they're at the same, but they go from Fairview to Westlake or
Well,
Westlake
the
to Parma?
taxes are
Taxes.
Big
Yeah.
difference,
Yeah.
right?
No, yeah. Go to Cleveland Heights. Or something
Wait till
like
next
that.
year. I mean, now everybody got the Cuyahoga County Sextennial or whatever it's called, where they reevaluate the houses. I mean, I know my house went up $100,000. I know a lot of people's houses went up $100,000.
I have
plus.
people contesting.
Oh, yeah.
I'm helping them contest it right now.
Yeah, that's another thing we do. Yeah,
So some of the city groups I'm in, it's an uproar.
yeah. I mean, it's
like-
gonna
it's
happen
like-
though. Your value goes
People are
up. They
like,
want
how do
the
we
money.
rally against the city to?
Well, the other
to-
issue people
to
don't
handle
realize
this,
is
you know?
there's so many digital values of it. Values are so. But in the past, you get like a house that's worth $500,000 and it's valued for $260,000.
Yep.
Because the county didn't have didn't have a ton of information on what values are. They just utilized what they used.
Yeah, that appraisal is done differently as well.
And now, the counties have access to a ton of digital sources.
Oh, I just had
all the
I had one.
appraisers are all recorded in a
His came
system.
in magically at the new sale price.
Correct.
Magic.
Yeah.
His taxes went up. I'm helping him contest it. Have them.
But yeah, I mean that's the hard
have them
part is
prove
that
it.
you got to prove it.
Yeah.
And then even if you prove it, sometimes they'll tell you no. I know that happens a lot too.
Yeah, didn't Todd
Todd tried to
have
do it a
an
while
experience
ago, and they
with
told him no. Yeah, yeah.
that? Where he brought an appraisal to the
Brought the
board
appraisal to
meeting or
the
something.
meeting, and they told him no still. And that's
No,
gonna happen.
funds are already
I mean, don't
allocated.
expect that maybe not to happen because,
Wow.
I mean, they have their information too, so it's gonna be tough. But definitely that's something we're trying. We try everything. I mean, we've done
all they can tell you is no.
out
Yeah.
of the box stuff. I mean, we can go
You
around
don't
the
ask,
table and
you
talk
don't
about all the
ask, you
crazy
don't
out of the
try.
box
That's
stuff
it.
we tried. I mean, we tried crazy stuff to get people approved. Crazy stuff. I mean, nothing illegal, but crazy stuff to get something to happen so we get them approved.
When you
Of
change their
course-
lives. Now they
Credit
build
repair.
equity. Now all of a sudden they're
Yeah.
building equity that instead of renting.
Yep. But yeah, that's part of caring about your borrowers. So go ahead, go through more of your credit. Like you take them, you see that no matter what the score, unless it's over 780, it's really not. We really don't not try to optimize their credit.
No, yeah, because there's still hits. It's all about money out of their pocket. So again,
Exactly. I mean, it's like,
when I say hits, I mean loan level pricing adjustments.
Yeah.
So that's money out of your pocket when you were buying a home.
If you go
It's not a
conventional.
refinance where it's just whatever.
yeah. No, I mean, like one of my agents, they picked up a client that had a pre-approval from another local lender. Not saying names, but they just gave him a
let's try
flat
to say names.
FHA. Yeah, just a flat FHA approval. And it just wasn't great terms
Yep.
as far as the rate. And we're like, hey, let's look at it. And then we have that. They are a very low income borrower, so we took them and raised that score up. Put them in that 2% grant program, and we're able to give them the other money.
Well,
I mean, their
say the
down
word
payment.
again. Say the word again. Grant.
Yeah, the
Yeah.
grant. So
Grants
it's
aren't paid
immediately
back.
forgiven. Yeah.
Right.
Yeah. So it's like, hey, like for example, this one we're actually coming up on closing on it, but their parents were going to give them, like $6,000 to make this loan work, and and then he was going to liquidate his 401k and everything just because the fees were so high because of where the credit score was, and we got him in that grant program. I mean, we're giving him.
Well,
like
you didn't just get him in the grant program. You got to score much higher.
Well,
because you
yeah,
can't
we
get
got
in
the
grant
score
program
up
without
to
it.
get him into the grant
Right.
program, and I mean, we're giving him $6,000 off rip. Like, I think the parents only need to bring like $1,800 at that point, or he can. And
Well, that's
it
the
really
difference.
doesn't-
The people don't understand. How
money's
would they? By the
immediately
way,
forgiven.
you wouldn't understand, but that's what we're trying to do.
Yeah.
is
And-
limit the money out of your pocket.
And he can keep the 401k going. I mean,
when
it's
you
just
buy,
like it's not a
I
good
don't know
time
if
to take
anybody's
it
ever
out.
moved. When they move, you want to buy, you're gonna something you're gonna need. I don't care what it is.
Yeah, exactly.
If it's furniture for the basement, if it's, a new lawnmower, or
Talking to the man that hit his 10-year mark on his new house.
right. Yeah,
Everything breaks. I mean,
Right.
everything breaks. I
So
lost everything.
That's where
So I agree.
saving them the money up front to put down on the house
Exactly.
by increasing the score, putting them in the right grant program or what have you.
Yep.
Yeah.
Is actually huge. And I will just tell you that is not done throughout industry wide.
Oh, I know. It's like,
It's-
well, you shouldn't put somebody into something where it's like, hey, they have absolutely nothing in their bank with it the time that it's over with. It's like they move into a house and they don't have even have the funds to put furniture in it.
That's
you know?
that really comes from caring. People would be like,
Yeah.
here, just take this loan.
When you're a check.
Yeah, it's
Yeah.
like, hey, I'm not
So-
going to do
Yeah,
that.
you're a
for
check.
you.
You're not a
Like,
consumer. You're a check.
I'm not going to do that for you. We're going to set this up right. Make sure that you get in the house, and that way you're going to be comfortable in that house and be able to afford it, and have a plan of action. I mean, like I want to grow with you, and then in a couple of years, it's like, hey, you call
that's
me
with
back
having
and
a
make
good
sure-
realtor too, though. Your
Right.
good realtor wants to work hard for him
Absolutely.
and fight for him.
Yeah, lifelong friend.
I worked at a lot of companies that even have grants.
Yeah. No, there is a lot of companies that don't have them.
Yeah.
This was the first one I was at that actually has grants.
So yeah, there's a lot of programs that we have, and we can sit here and brag about what we have. But there's a lot of stuff that we have.
nice.
I mean, we have 3 national down payment assistance programs, where most people don't have one,
Right.
or they have
they don't have
just
any.
one. That's why I said they don't have one.
Yeah,
Sorry, yeah,
right.
or they have one. We have multiple different down payment assistance grant programs. And that's one of the good things is that, when you do work with, a good
Well, I just
company
done the
that
same thing.
understands them and
We
understands
took
what grants.
a guy from a 4, 89. It was 4 something. All 3 of his scores in 2 months to be qualified for the grant program.
Yep.
The down payment assistance.
Yep. And
So
there's
you know
multiple.
what kind of score you had to have to get that. So that's the type of stuff that's the difference.
Yep.
Not just getting them to 580 so they can qualify for something. It's taking them to the next step.
Yeah, we have down payments in all the states. I
Yeah.
mean, California, Florida, Tennessee, Ohio. So not just Ohio, and we're Ohio based, but we have a lot of different down payment assistance grant programs across the country. Nevada, stuff like that.
On that, I don't know the answer to this. I had a question actually.
Yep.
This came up because I'm helping a guy from Ohio who moved. Do they all generally have like the Ohio program? Do they all generally have one?
They generally have something very similar to the Ohio program.
Right.
Different. Some of them, like California, has like 3 or 4.
I know
different ones.
California.
Yeah, Cal has.
Nevada has like 3 or
Be
4
careful,
different
California.
ones. Ohio has a
Yeah,
couple different
well-
ones. OFA is just the one that
State.
everybody likes the most. Probably because the terms are the
I was gonna
easiest
say
and the best.
easiest, yep.
But Ohio has a couple. So, and each county has their own. And then sometimes there's ones for
Cities.
the cities, and then sometimes
Yeah.
and this is just in the
Well,
Cleveland area.
they generally ran
Some
out.
of them ran
the
out of
city
money.
ones ran out of money. That's what I was going to say. The city
Well,
ones-
the county one ran out of money,
Yeah.
and then some of the cities ran out of money.
Yeah, like the University Circle one.
Yep.
Just recently.
But and then there's there's also business based ones where like if you work for a certain business, you can get grant funds or down payment assistance if you stay at. We talked about that
Yeah.
one. The only caveat to that thing is if you quit your job in 5 years,
or if you're
in 5 years
for whatever reason not working there.
Yeah. For whatever reason you don't work there. There's a couple
They,
of those.
they
too
quit
that-
your job for you.
Or you quit and you get fired, right? Then you got to pay
They
it
got
back.
to pay it back.
Yeah, so there's a couple of those too.
It's actually because of that one
Yeah.
thing. That's
Makes it
the
difficult.
last resort. Last
Yeah, it's
resort.
last resort.
of course.
And I have had to have that conversation with buyers because they work for them. I think it's great that the employer is doing it. However,
However,
can you
you
predict
wanna
it's going to happen in 5 years?
it's a balloon payment that is
Yeah.
due when you
100%.
lose your
It
job.
doesn't drop
you
down.
Better, you better
Right.
keep your
Right.
job for 5 years. It's a tough one.
Don't have a stroke.
Don't die.
Don't have. Hey, listen.
I'm sure if it was something medical, you can get some leeway. But I just know if you get fired or you quit your job, it goes away in some cases. But there's a lot of those, and so yeah, each state basically has them. They're all accessible online. We are approved in like almost every single one of them.
Oh yeah.
The list is huge.
Yeah.
So if you have a guy moving to a certain state, just let me know. We can look it up and tell you if we don't have. And if they do, I mean, they signed up. We had a group coming that was going to join us that was looking for the New Jersey one, and they were signing up already. So they're all states right now.
That's the difference between one bank and another. We're not all the same.
Yeah, it's correct. Yeah.
You know, they don't have that OFA, for example. They don't have that.
Well, that's the tough thing about banks is, and again, I'm not saying anybody's better than anybody else, but I know that banks care more about capital more about having checkings and savings accounts and having money in their bank instead of profit. So like being part of a couple banks in the past, mortgage side is just really a profit generator. And so they're really just looking for you to put your money in their checking, savings, and all their other multiple accounts, and all the other services they offer. The profit from the mortgage side is only utilized to grow that, so the capital ratio is the most important to them. Being part of a bank that grew using the mortgage profit, that's the one thing they don't really care about. Like, we're only focused on mortgages. Their main focus in some of these banks they're not mortgages.
It's not,
so they're
right.
going to have a little bit, and they have more risk. So they have more oversight. They have to be more risk central. So they have to think about it centric. Sorry. So they have to think about it more.
Yep.
So they're going to have a little bit more risk on their product. So risk oversight. So it's going to be a little bit tougher to do a loan with a bank than it would be with a mortgage banker like we are, a mortgage company.
Right.
So that's the other thing. But, in some cases, they'll make things proprietary products, and they'll do some things if they think the person is a good.
The old school kind of,
If they think the person is, if you have a lot of money in that bank, they're going to do some stuff, right?
Yeah.
But the other thing is, if you have a lot of assets, you don't even need us. You just borrow against your assets. If you have a couple, $10 million in assets, you can just borrow against those.
Right.
But in most cases, we're going to have a better product, and it's going to be a little bit easier to get it closed. But yeah, so tell me a little bit about what you do when you pull that credit, because you're the master of this stuff.
I almost run it immediately. At least again, and it's because of I hate to preach on it, but the loan level pricing adjustments. So moving someone from A to B is
Well, first off, the people that don't know, it's not free.
right.
We pay for it.
No,
we don't charge for it because we can't.
Right.
So when we do this stuff, it's a service that we pay for them, and it's not cheap.
No,
If you do
it's
a
not.
rapid rescore, it's like
It's-
$300, $400, $500.
It depends on. It could be more than that.
Yeah, depending on how many
Yeah.
trades.
How many
and
trade?
trades.
How many trade lines?
And then it's it's an average of about $40, $50 with already the high credit prices, because they just drove those prices, doubled them.
So I could imagine there's a
Yeah.
lot of branches and banks out there that won't even do it because of that right
Yep,
there.
right there.
And what I mean by that is not the person that qualifies to buy a house. That's
Yep.
the easy part.
Yep.
It's taking again the 622, making them a 680. Now your LLP, your pricing adjustments go away. Now it's cash out of your pocket. That's what it really is.
Right.
On a refinance, no one cares. 'Cause
But
no
it's
one
also an
knows
extra
anything.
credit report.
Yeah, no, on
you have
our
to
end,
pull- on
no,
our end.
on our end, we're paying.
So if we
for
fix it, we got to
for
pull it
them.
again. Yeah.
But I'll still do it anyway because it's just
do.
it's they don't see it, and they would have no idea how it saves them money.
Yep.
But again, I'll say 50 basis points. We all know what that means. 0.5%. of $300,000 is $1,500.
Yep.
You bring that to the table when you buy a house. You're not refinancing that in.
And we don't make any more money.
And we don't make a dime on it.
It doesn't
Just
matter
because
if
your
you
credit
close at
Right.
X or Z. We're making the same amount of money on it, no
Right.
matter what your credit
It's
score is
because
and what
you-
you get charged.
It's because your credit score where it's at.
Yep.
So I'm raising them constantly. In fact,
That's the first thing is you're doing it. You're doing a service that you're paying for that doesn't increase your pay. So it's definitely just that alone
right.
shows that you care.
Sure.
And I can tell you, they sometimes they don't even know.
Yep.
You know, I'm just doing it because I don't have time. I'm not going to bore them to death explain it to them because again, if you're doing this one time or the first time, I try to make this whole thing an education because you're going to do it again. Okay, and I promise you, I've had the people say, "Well, I bought 3 houses. I know what I'm doing." No, you don't. First of all, the market's
No, it's
changed.
changed,
Okay,
yeah.
let's just start there. You bought your first house to today; it's a whole different market.
Yep.
Okay, so, and you know, you change your oil, but you wouldn't fix your car.
Yeah.
You know what I mean? So you don't know, and so that's
That's
once
the hard
you
part.
explain it to them that way, they understand. You know, let's start there. The industry's completely upside down and changed from when you bought your first house. It's
Even
totally
just
separate.
2 years ago.
Right. Yeah. Even 2
Wildly
years
different,
ago.
right?
Right. Yeah. Again, it's about saving the money. They don't even know. You know, so the higher you get the score, regardless they qualify or not. Yeah, that's not the point. Is the higher you get the score, the less money out of their pocket.
Yep.
And then I should tell them more with the why, but again, I'm not boring them to death. But I talk about this as an education for them. It's not going to be your last house, hopefully. Okay. And so the next time, you're going to be more and more educated on what we're doing.
Tell them more about like the cost of it.
Oh, the cost. So yeah, so when we're doing it and we're rescoring it, I mean, depending on per trade line, it's anywhere from $150 to $200 per trade line. So if you're doing 4, there's $800.
Yep.
And we're not charging
that
for it.
I'm paying.
Yep.
You know, or we, I should say.
Yep,
You know what
we
I
are
mean?
paying. Yep.
We are paying. And they don't even. I don't even tell them that. You know, I guess I should to kind of number one to build value because it's true.
Yeah.
You know what I mean? How's that? But number 2, I'm only doing it for you. Like I'm spending $800, so they save $15.
Yeah. And it's already they're already qualified borrowers.
Yeah,
in
they're,
most
like you said,
cases.
they already qualify.
Yep.
So
Even if they don't qualify, that's
that's
a
where-
difference. We're taking somebody.
Yeah.
So there is some self-serving when you spend that $800. So that's how that I can justify. But this means that this proves that you really do care because it's like you're doing something that you're not going to make any more money on,
right,
and you're only losing money to save them money.
Right.
Yep.
Yeah, because again, we just talked about it. When you go into that house, there's things you're going to want to spend money on.
Yep.
That you're not without pulling the credit card out and having to do that. So the more cash I could save them, you know, the more. And that's how I look at it.
Yep.
You know, so whether they know what's happening or not, and in fact, even when you explain it, sometimes remember I'm doing it over the phone. I have no idea if I bored them to death and they're putting the phone down, on the speaker and not paying attention. You know, who knows? Not that I'm making a joke about it, but my point is they're really saving money. We know that because look at loan level pricing adjustments. Just that simple.
Yeah.
You know, so
Yep. That's a huge thing people don't realize.
I'm telling you, by the way, doctor, by the way, we don't know the credit scoring model how it works. So by not knowing, they have no idea why their scores where it's
Oh,
at.
yeah.
But take a 660 to 740. It's a huge difference.
So you got a lot of people, they use the old school method of saying, don't pay off any collections. If you pay off any collections, it's going to hurt your credit. Well, you don't stop at just paying off the collection.
No.
That's the issue, is they don't know the next steps. Of course, we're not going to tell our secrets, but there's other
Right.
things you do after that.
Right.
So I've had borrowers, like there was one person that's in a group of mine that was like, hey, can you help this person? So I help that person. We get them all good to go. And then we're doing their purchase, when you guys are doing their purchase. And then that person they were buying the house, that was buying their house, right? They fell out. And same thing, because a lot of people like to just pull the soft pull and then never pull the hard pull until the very end to keep from trigger data.
That's a problem.
And that's another problem that people do. And so what happened is they were ready to close, and then they pulled their hard
The
pull.
collection popped up.
And then a late popped up.
They popped up.
Yeah, and so now it drove their score below what they can do it. Now they couldn't do it. And so then I was like, all right, well, we'll help them. So then one of you guys took that, and we did that one too. I think Scott did that one. It was the person that was their original loan officer was like, no, don't pay off the collections. That's not going to help. There's no way. I think we're in trouble, blah, blah, blah.
Again, that whole I think. We're guessing.
Yeah.
Oh, my
So I
gosh.
looked at it, and then within, I don't know, maybe 30 seconds, we were able to say, okay, this is what we need to do. And then we got their score from 570 to 640, just like that, and turned them from a refer eligible manual underwrite to an approve eligible within a week. Approve eligible easy loan, and closed that loan pretty easy for them. And that's experience of knowing what to do and how credit is scored. That's the thing, is they only know what they've been told.
I'm helping them one right now. I'm not even making a loan. I don't care. Yeah, I mean, the realtor needed it. I'm like,
we do it all the time.
Yeah. Right.
Oh, I get questions all the time from other loan officers.
Yeah, little lenders.
It's always good to have people that refer to you, and always people you can refer to, because I have a group of people that if maybe I'm just running out of ideas, I call people. You know what I mean? So it's always good to have someone in your network. It's better to have someone on your side, though, because that's the hard part, is people don't realize is most of your LOs, the person they have to call is really in a position of protection of default for the company. So like most of your loan officers, and they're not on the loan officer side, and they're not on the side of,
right.
And most of your people they work with don't have the experience. Their experience is really on just being a loan officer
or management.
Their manager is most of your managers are just people that were good loan officers.
Yeah.
And not to downplay the loan officer's experience, but they've only been focused on one thing their whole career, so they don't know.
Good loan officers back in a different market with whole different things. They go to them with a question they don't have an answer for because markets have changed. That's the one thing about keeping your finger on the pulse. That you can.
Yeah, it's hard. Like it's like when some of these guys, if you're even your top level loan officers in this industry, if they have an issue, they have to call somebody, and that somebody is in the operational team. They're not in their origination side. They have no one on the origination side that's ever sold a loan to an investor, never managed capital markets, never did any of that stuff, never underwritten a loan, never processed a loan, none of that stuff. So most of them just they're basic people that they have to reflect or ask questions to are processors that are the ones helping them, which is great. Processors, some really good processors out there, but they've never sold a loan, so they don't know what's going to come up post-close. Because really a lot of your craziness, overlays, underwriters that are a little bit more difficult all come from them getting smacked with post-closing conditions.
That's exactly why. Right, yeah.
Yeah. And then when the company gets overflown with post-closing conditions, then everybody gets in a tizzy, and then all the underwriters are a little bit more aggressive. I've been on a lot of these calls with people recruiting me, with the operations person, and I've been that person for reflection. And, I don't lie, but there's a lot of people I've seen lie. I've been on those calls where the operations person, yeah, we would never do that. Yeah, we never do. Yes, you would never do that.
Right.
But your underwriter will. Your underwriter will. You don't know your underwriter well enough. They could have a bad day. They could have maybe they make a mistake. Everybody makes mistakes.
Yep.
Right? Or it could be a new underwriter you just hired that came from another company that had a different mentality. Right? So you're going to still get that no matter where you go, because it's like it was constant. Like, so do you think that I'll get this? And I'd be like, yes, you may get that. But the good news is that I'm on your side. I don't work for the operational side of things, and I'm going to help you restructure that and get that proved. I mean, that's the thing that people don't realize is, yes, every company in America has an underwriter that's going to make a mistake or condition for something that they shouldn't have to. Yep. Or say a loan isn't good when it is. It's just...
Or pass a loan that's not.
Oh, yeah.
Correct.
Yeah.
The other side, too.
Yeah.
And if you don't...
Sellable.
If you don't know what... We have that now, too. Right. But we do. We aggressively fix it for them. Mm-hmm. But that's the thing is if you don't have the experience or the person behind you that's on your side, it's going to be tough. It's going to be real tough to overcome that. Mm-hmm. Do you know what I mean? And that's where it's like, why would I get turned down here, and why am I approved here? How are you able to fix that and I'm not? Well, one, we have a group of people that are well trained, that know what they're doing, and we have a group of people behind them that are well trained and have actually done the capital markets, the underwriting. So that are on this side of the ball, not on the other side of the ball. So then you can look at that and reflect on that and be like, all right, here's what we need to not do, not send, here's the letters of explanation, or here's what we're gonna need, so that when we do submit that file,
there's no questions asked. Or they at least see the why.
It's kind of like I always say, it's like having a cyber hacker, someone that's a cyber hacker that is on the side of security. Right, those guys make the best cybersecurity people in the business.
Oh yeah, the
you know what I'm saying? The
former
bounty hunter,
the bad guy that was
the guy that was a hacker, that now is on the side of security. That's the best guy for your cybersecurity. It's the same thing with that. Is the people that have underwritten, and it's all mindset, because their mindset, let's be realistic, is protect the company No buybacks. Protect the company. No buybacks. And ours is close as many loans as possible.
Right.
Well,
Help
and
as many people as we can.
now that we've done that,
That's
they
conflicting
also
mindset.
Yeah.
it's now they're cleaner submissions because they first of all, it's not just coming from a loan officer and a processor. No disrespect to either one of them.
Yeah.
But they're submitting the income, and here's the why. And that way the underwriter knows what they're looking at. Because many times they have no idea what they're looking at. Even if we were right, being a loan officer and processor, we were right.
Yep.
They have no idea what they're looking at. And it just creates more confusion and more time. Whereas when we have that middle person in between now.
The other thing is people don't realize is there's a ton of buybacks from Fannie and Freddie right now on variable income. I mean, there's been more buybacks in most companies across the country in the last 12 months.
Because of variable income.
Yeah, than there has been
It's
in
like
10
they just
years
automatically
before that.
changed the rule on it. It's like,
Oh, they did.
I know. Like,
They did.
Yeah.
They never had this crazy
tell
rule, and then they
everybody,
just started
right.
creating and enforcing it.
right.
And so now variable, like anything's variable income. Like literally, if you're set to work 36 hours, and listen, I called Freddie on this, so I know it's 100% what they told me. If you scheduled to work 36 hours, but now you work 40 a couple times, that's variable income.
Yep.
So even going up, not just going down.
Yep.
No doubt.
Yep.
Yeah, it's like I have a client too. They're scheduled 70 hours a week.
Mm-hmm.
They're scheduled, but
Now there's a way to get that
Looking-
done, and we do that, but it's just that people don't get that. There's stuff you have to provide now.
yeah, no, I mean like we got like end of year pay stubs and everything, like to try to prove it, and even talking to Frank, he's like, this might be a little bit difficult, and I'm like, why?
'Cause it's variable.
scheduled that way. And he's like, well, traditional is 40.
Yeah. As long as it's scheduled and equal. So like how they don't, if you're scheduled to work 70 and you always work 70, you're good.
That's fine. Right.
You're
You
fine.
catch it, you catch it, and it's like, oh,
If it's
they
once or
didn't-
twice and you can get explanations from the employer,
Yep.
then you're fine. Or if it's the other way, once or twice, or
Well, that's
you have
where-
scheduled,
that's where
if
you
you have
gotta-
unpaid days off and you get that from the employer.
It's good having that middle person in between
but it's
because
good to know what to get and look at it. Like on this one, like we use Argyle to get all the pay stubs they've ever had over the last 12 months or whatever.
Yep.
We got the borrowers, all their pay stubs.
Right, to
And
prove
literally
hours
put
worked.
together a presentation of like, here's what they've worked every single pay period, this many hours. If you average it equals this, here's the employer that says they equal this. This is how many hours they work. He had this many days off, and we had that all at the beginning, and it makes it easy. But people don't know that. They'll just submit the file and then be like, why won't you do this loan?
Yeah, that's what I mean by the people that, for example, they work somewhere and they're the first one to leave whenever anybody on the shift can leave, and they're constantly leaving. Well, that hourly they makes garbage. Doesn't matter. Yeah, because of the time they actually work.
Yeah. And some underwriters will catch it, some won't, and some companies are fine. And, ours is with being with a bigger company.
It's gonna get caught by.
But with ours being a bigger company, it's easier there's a bigger appetite for letting stuff like that slide. We're also fee-based now instead of being buybacks, which makes us a little bit more, understanding of different income situations.
Right.
So that's another reason you want to work with certain companies and not others. The operational team understands what needs to get done.
Right.
But yeah, so that's a big thing. But yeah, I agree with credit repair. It's another big thing that people should be,
Everybody uses the words, but they're not.
And it isn't credit repair; it's credit optimization.
Yeah, it's
I had one where we took it from 710 to 785.
Yeah.
Saves them a ton of money.
Yeah, you imagine buying the $500,000 house. Again, 75 basis points.
I mean, we have tons that
There's $3,500.
you've done where we took them from, the 540 to the
Oh yeah, that's different.
680.
Yeah, they do that.
But
But it's the other side too.
The optimization's the other side, where it's like I'm going to optimize this person's credit.
And some
score.
banks won't. Number one, they don't know how to do it. Won't do it. And again, because of the cost, they just
Too expensive.
Yeah, they're not
Too
going
much
to do it.
work.
Oh, most banks won't do
Don't
it.
care.
Right, they won't do
Yeah.
it. Right.
Don't know how to do
Mortgage companies usually are the only ones that'll do that.
Right. Oh yeah, banks. I should say banks will not do it.
Yeah.
Right.
I mean, there's banks that are more call center based banks, but yeah. So that was one of the craziest. But yeah, so tell me a little bit about your history. So like all the way through from when you started until now. Because one of the things that we really want to talk about is that lead based company you started, right? So we'll get to that point, here in a minute.
Yeah, we've always, even when I initially started, and there's a tremendous. I'm not alone in this. There's a lot of former UC Lanier United companies, guys and gals that go out and get their own business. Versus sitting. If you sat with your hand out, you weren't getting any. So we've always learned to do it that way. But then, even in call centers, we still went out to get our own. I mean, we
Created our own business.
created the calls.
Yep.
You know, so it wasn't like we just sat there and somebody calling handed over. We created the calls. As, why are we calling? What are we calling? Who are we calling and why? I should say.
Yep.
So that's all developed based upon what products we had available, whether that be fee based and now, non-fee based, which was its own little nightmare. It was always illegal. It's against
Right,
the
correct.
Equal Credit Opportunity Act.
It's always existed.
That's nothing new.
Yes.
It just was enforced. So, but yeah, so we came from that, that type of markets,
Yep.
to now, and we take that to this market we're at right now.
Yep.
So we take that same mentality here, and I'm no disrespect to the folks that don't. They were always on this side.
Yep.
And they do, they do a lot of business. And I'm not disrespecting them, but a lot of times they just don't have that mentality because they just haven't done it.
Creating business.
Creating, yeah.
Yep.
So,
Yep. I mean, the one thing that you did create that made me and you and a couple other people a lot of money
yeah.
was the heartprogram.org website. So go into that one.
So, yeah, it actually was, things start from the simplest things. I used to be a lender rep, right? But that's what we were at heart when we were United Companies UC Lending. We were, now they switched to some call center stuff, but I had left by then. But a lender rep came in, told me this program it exists. This was after the meltdown when we already ran back into the house that was on fire. And I looked at it and I'm thinking, this is the answer. So I had a person that was a partner with me that came from another industry. They had no idea. I didn't have time to teach them. Can you imagine trying to teach somebody this industry overnight? It's impossible. Yeah. You have to touch things. That's one of my complaints, that everybody's an expert in this industry. You couldn't go be a carpenter in a week. You have to go be an apprentice.
Yep.
But many times you come into this industry and all of a sudden that's my competition, and the consumer has no idea. I get that, But in the end, all of a sudden they're an expert. Well, no, you're not. You got to touch files. So to that point, when the HEART program came out, it was solving a problem. So this is when kind of internet websites, I should say, were optimization, things like that, were in their infancy. So I created heartprogram.org. We created a website for people to get the message out based upon a flyer the lender rep brought in on the HEART program. And I used, we were an organization, that particular site was an organization, so heartprogram.org. And it didn't have much traction until it was on the Today Show. And actually, the expert on the Today Show was wrong. She was confusing. She was okay about explaining it, but she was inaccurate comparing the Freddie side and the Fannie side. Mm-hmm. There were two different rules for both.
Yeah.
And she was inaccurate when she said it. I'm laughing at it. I'm watching it. And I'm like, that's not right. And so instantly people are watching that show, and they were all, the United States was in a problem back then. Mm-hmm. This was, by the way, what I'm talking about is when the meltdown happened.
Got it.
Okay, so who they got their loan from before was gone. In fact, Matt and I were at a place where we had 70 loan officers. In 3 days, there were three of us.
There were 70 loan officers and 140 telemarketers.
Yeah.
There was three of us.
There's three.
Yeah.
Matt Pennygoody and another guy, Dave, had a fight.
Dave,
all of them. I drew the short straws.
Yeah.
It was tough. It was really tough.
But so in any event, so then when that happened, hit the Today Show, people went to look. They were looking for help, because this program now existed. I don't want to get too crazy what the program was, but it rewrote LTVs. But in any event,
it basically was an unlimited program, unlimited LTV program. So
it didn't start unlimited. It started at 115.
Yeah, and then it ended up being unlimited.
They had to go because property values were decreasing.
Basically, all it was is, hey, listen, you made your payments on time. We reduced rates recently to help with the economy, and you can't take advantage of it because you're underwater. So they created a program for people underwater to be able to take the advantage of the lower rates and help themselves.
So they didn't, exactly. People couldn't, it didn't matter how that much the rates lowered because they couldn't take advantage because of property values. The damage was already done. Mm-hmm. So they came up with this program. Now you had to be in a Fannie or Freddie. You had to be in conventional. side.
Still exists today. It's called ILTV now.
Yeah.
Yeah.
So when they went to look at it, boom, they typed it in. This came up, and we got. I'm going to say this is a small number than the reality.
It was ridiculous.
200 calls, 50 calls an hour, more than that.
Wow.
And there's 3 of us in the office.
Oof.
So the funny part is, I instantly, because the calls wouldn't stop, 24/7 didn't matter. They
So
just
my
kept coming.
experience with this is that we're on a golf course.
Yeah.
Before it came out, it was me, you, Dave, and I forgot who else was with us.
Right.
And he's like, this new program, blah, blah, blah. And I looked it up. I was like, oh, this is going to be wild.
Yeah.
And then you open that up. And then next thing you know, like you said, you were getting so many calls. He called me. He's like, do you want some of these? And I was like, we'll figure
Couldn't
it
help
out.
him.
Yeah.
I hired my neighbor. She worked in the doctor's office. I said, no more. Tomorrow, you're answering calls.
So many. He was above heartprogram.gov until Google forced him down.
Yeah.
So his website,
I
since
never-
it was
I never paid.
first-
I was
Unpaid.
unpaid. I wasn't sponsored. I didn't sponsor it. It's
Just made a website.
It's made a
It was
website.
first, and
It
people
was
went to it first. Yeah. So he had
Because
more
of the traffic. that
natural
was going to it.
traffic. Yeah.
That's great.
Yeah.
The people searched Heart Program, and there was no website yet. And so his came up because his was heartprogram.org. And so natural traffic creates you to go to the top. And since he was older and had more natural traffic than the government site, his went above
Always.
heartprogram.gov.
100% of the time.
It was always above it until they forced it.
Right.
They never forced it below.
But it helped a ridiculous amount of people because
Yep.
there was a lot of questions going on. They would call, and again, I could take it. Like they'd yell at us, like we did it. I mean, listen, call your congressman. It's nothing to do with me. I have a solution. Okay, they created a solution, but they're terrible about getting the message out. Again,
they're terrible.
it was on. And it is what it is. I mean, you're on the Today Show one time. The information he gave, it was fairly accurate. It was just flip flopped, Fannie and Freddie. So it wasn't like the person did a terrible job. But it's one time. That's it. Now all of a sudden,
Yeah.
but the consumer still has no idea what the hell they don't know Fannie and Freddie and all these. They have no idea.
We built a huge business off of it, both of us.
Yeah. So these guys had the LOs
Yeah.
because I called them. I said, listen, I don't. It won't stop. I couldn't hire fast enough. You can't just hire somebody off the street in this industry.
No.
Yeah, I mean, and expect them. So in any event,
And so
it
then-
blew up for years and years and years.
Yeah, it was a pretty good time.
So anyway, that's how it began, and then we helped a ridiculous amount of people.
Oh, God, it was ridiculous.
And so that again, it's the same thing going on right now. It's
Yeah.
the message, with veterans, for example, like VA loans. They have
Yep.
no idea how the VA does a ridiculous amount of good things for veterans, but the message, where do they get the message from? And now it's even worse because you're navigating the internet. If you type one thing in there, the whole entire page is sponsored.
Yep.
They don't know what that means, So it's overload now. So back then, where it wasn't, because it was I don't want to say infancy of the internet was still there, but where now it's the opposite. So the message, getting off to like I literally had a veteran, like last month it was, in a meeting, and he stood up and asked me about he goes to the VA to get his loan. It's perception, and so
And people think that the VA is the one lending
Yeah.
them the money, and it isn't.
the VA doesn't lend any money.
Correct.
They never have. Okay,
Right.
but again, I was lucky I was there to explain it to him. But that's the point, is what's out there. And then if you don't know what you're looking for, you can't get the answers you need. Because you don't know what you're looking for.
Yep.
And what I mean by that is on the internet now.
Right.
So that's going to get even worse with AI, I think. So it's going to be a lot of stuff like that.
AI is crazy right
Yeah.
now.
Oh,
Go ahead. Go through your historical process. We can go more in AI in a little bit.
Oh, it's awesome. I think it's awesome.
I agree.
Um,
It's
I mean,
amazing.
just some of the stuff that you can use the tasks, to better and enrich your life. I mean, man, I pulled into Aldi's this like almost a year ago, where I kind of discovered this, and I was, I was like, I didn't. Usually I try to go pre-plan, like, okay, what am I going to get? What kind of meals am I going to create? And I'm literally walking into Aldi's, and I decide, I'm like, let's test this out. And I wrote on ChatGPT. I'm like, hey, generate me a grocery list, with health focused meals. Give me a budget of $150 and want it to last, week or two. And it literally came up with an itemized list of the groceries with estimated prices of what it would be, and then breakfast, lunch, dinner for 14 days.
I seen that commercial for ChatGPT.
Oh,
I think they use that exact formula.
And
the person in the parking lot.
Yep.
Yeah.
and so I'm like, let's test it out. Let's see if this actually works. Bought them, followed it. That's how I do it now. It's awesome.
No doubt.
Yeah, it's awesome.
So if
I
you're
mean,
not
that's
using AI in your business, you're gonna go the other way.
Oh, for that, for that one file that we had where it was, we were looking at the same guideline basically with this underwriter, and she was interpreting it in a completely different way. It was that property. We had 2 parcels.
Yeah, we got that done too, which is cool.
Yeah, well, I asked ChatGPT for an answer on it, and I was like, hey, can you do this? And it gave me, boom, boom, boom. Here's 3 references from the selling guides of like why you can do it.
What people don't realize is if you're buying 2 parcels and there's a manufactured home on one parcel, and your house is on the other, you can't do that
If it's permanently fixed.
if it's permanently fixed. But even if it's on a separate parcel, you can't consider it an ADU. So you have to.
Well,
you can do a manufactured ADU, which could be a separate manufactured home on the parcel.
Right.
You can call it a manufactured ADU, but it has to be split on the property line, and the other property can't be sellable. The other parcel.
Yep.
So you can't build a house on that parcel. Or you can't split it.
Did you
off
guys
and sell
combine
it.
them? Is that what you did?
So what happened is that there wasn't a manufactured home that was slightly on like I want to say part of it was on one parcel and the other part was on the other parcel.
Yep.
But you wouldn't have known that if you didn't look it up on the county records.
Right. It was right in between
correct.
each parcel.
And it couldn't be considered it was an ADU. It wasn't a separate home because it was not on a permanent foundation.
Yep.
It was
Not titled correctly.
Not titled correctly.
Yep. It had a permanent foundation.
It had a
but
permanent, but it
wasn't-
was
It
split.
was still titled, you're saying.
So you,
It
look,
was,
if
it was not.
it can
detitled.
be
registered like a car.
It's not
It was still-
detitled,
it
so
wasn't
we
deed.
considered
Right.
it chattel.
Yep.
That's how we
Right.
got it done.
Yeah.
We considered it chattel. But even if you can have a manufactured ADU, if it's split by the parcel. So either way, we were right. So either it's on a permanent foundation and it's split on the parcels, and the other parcel's unbuildable, it's a manufactured ADU. It's not on a permanent foundation,
And then it's just a mobile home.
then it's just chattel.
Right, yeah.
It's like a
Chattel.
car on the grass.
Right.
Yep.
And so people don't realize that
Yeah,
stuff.
you got a portion of the driveway doesn't change the value of the home.
Correct.
Right?
So either way, we were fine. Just the other parcel has to be unbuildable for conventional, which it was because there wasn't enough frontage space for that to be considered a parcel that you're allowed to build a home on.
Yep.
So there's a lot of things people don't know where the initial was like, no. And then the next person was like, no. And then it's like, no, here, rethink that. And then if you're with the right company, you have the right people in place that are willing to rethink that.
Yep.
Because the hard part is if you work for a
Accepting
company
a no.
that
Just
won't,
accept the no.
Right.
That's
No,
it.
no.
if
It
they
is
say
what it
no
is.
and they're not, there's no one in that company that you can talk to, including the underwriters or the underwriting manager, or the operations manager that you can give the correct information to. Because how many times do you think an underwriter's come across that? I guarantee you there's underwriters that have been in the industry 10 years that have never seen that before, right? And so it becomes, okay, do we have someone we can talk to? Is there someone that can correctly give that information? Is the loan officer like Spencer knowledgeable enough to then correctly put it in the right words and get the information correctly to that person or the underwriter? And are they
So
willing to change their mind?
did you release the title? the car title?
We didn't have to change anything with the
We didn't
property.
do nothing. We just closed
Yep.
because it was chattel.
I just,
Oh,
I-
you okay.
I asked
It wasn't your
ChatGPT
primary
on-
residence.
on-
It wasn't your primary residence. There was another residence on the title.
And the issue is there's such a gray area with all of those.
But
different
there's not
factors
though
on
with the chattel, because you
No.
just said it right there. Because I've fought that fight many times. I've had properties that had
Well,
4 different manufactured homes on it. He rents them all out, and they tried to use that. I'm like, those things are still those are mobile homes. They still have their
The wheels on
yeah,
them.
wheels on them. Yeah, that's,
right.
you know,
But yeah,
so-
but I mean-
and more importantly, they still have a car title.
Well, the other thing is,
Yeah,
it
it's not-
didn't
it's
matter
not been
either way.
detitled.
So
Right.
that's why it made it really easy.
Right.
Because no matter which way you went with it, either
Yes.
you considered it
Right.
chattel or you didn't consider it chattel, it's still a closable loan.
So
You got
if you
it.
if you did consider it as a
ADU.
single family
It's a single family home with, let's say it was on a
You didn't
permanent
give any
foundation.
value. If it was on a permanent
It's an
foundation.
ADU. No,
Yeah,
you would consider it an ADU.
okay.
So it'd be an accessory dwelling unit. So it would be an
Right.
ADU. You consider an ADU, and you'd be able to do the loan.
Yep. What was awesome is that there's so many different gray areas, and obviously the selling guides are like a million pages.
They want you to make a
trying
mistake.
trying to go through it, and so I in last ditch effort I plugged it into ChatGPT and I was like, give me references to prove that this is doable. Like I'm positive that this is doable. We're going to be able to get it done. Give me 3 references to fight back with, basically, and it did. Pulled up those guidelines. Me and Matt looked them over, and he's like, "Damn, we can do this.
Yep.
This will work."
Yep.
We just got to make them realize it. And they were looking at those guidelines, interpreting it incorrectly, and we kept hammering back like, "Oh, this is why."
Well, and again, the difference
Got
the
it
difference is,
It's an awesome
just
property for
because
my
someone's
client.
a 700 credit score, 740 credit score, that's the least. I don't say the least, but that's a very limited amount of what really gets a loan approved.
Oh yeah.
Oh yeah, no.
You know,
well, and the thing is like this property was awesome for my client, right? Like they get the house and they could rent out the mobile home,
Family or what have you.
yeah, put their family in there or whatever, and end up almost covering the whole mortgage on it. So
Yeah, and it's
they were like, "This is the one." It had the land. It had an old barn in the back that basically they were going to end up taking off and taking apart and using the wood, or because he was super into it, doing things like that. And so I mean, it checked all of their boxes. And this is someone who was shopping for months and months and just couldn't find anything. They had one house that they got into, and it just didn't work out because the seller wasn't real willing to renegotiate on a low appraisal. And it was like, man, if this isn't it, they're going back.
How
to
low
renting.
was
They're
it?
not doing it. Huh?
How low was it?
How low was
The
what?
appraisal. How low did it come
On the other house.
Yeah.
The other house, it was off by like $30,000, something like that.
yeah.
But they were like, I know what I got.
in? Except if it was 10 grand.
This other house down the
doing?
street sold for this,
This other house was just,
even though the other house is 50 years newer and
this is definitely
800 square feet bigger.
because we've done that. I've done that a bunch of times.
Yeah, so,
where I've
yeah.
overcome the appraisal.
Right.
Which is
Almost
another
every
great
time.
thing.
I've never actually not overcome.
This one we
It
did.
just-
We did the
you-
original loan on this property. This loan, the house is worth what it was worth.
Yeah. I'd helped that seller.
We did
a year
the house
ago.
that they were buying. We actually did the loan for that house.
Okay.
Yeah, I did it like
So
a
we
year
have
prior.
the original appraisal of that house and did the purchase. It was a year old. It would have had to have gained like 40 to 50% equity in a year, and it don't happen.
No.
For it to be worth that.
So they had plenty of equity to do it. They were still gonna. They didn't have to bring any money to the table.
They didn't have the equity.
didn't have the equity.
because they just bought it a year prior.
Oh, so
That
it
was
didn't
the-
come in higher. That's what I
No,
was
it
thinking.
came in.
Okay.
It
We
came in
had to have
higher.
Right.
Coming that much.
No,
higher,
right. That's why
which
they
it
couldn't.
shouldn't
They
have.
couldn't accept it. Right,
Yeah, it came in higher than what they paid for it. Still substantially, but
Yeah, let's get
they
back
were. Yeah.
to AI.
Yeah.
AI
So,
for it. Tell us some more stuff about AI that you do.
Oh, I mean, it's awesome. Recently, I've been using like a session for like fitness coaching, which I think you'd probably love this. Pretty cool. I mean, you can use it as like a calorie counter of just like, hey, this is what I ate today. I bought it from here, and it will scour the internet and find the exact nutrition details of whatever you ate. You just give it details. You can put it in your workouts. I have like one of those smart scales that you step on, and it gives you like the, BMI and skeletal mass, muscle mass, and whatnot. So step on that in the morning, screenshot it, send the picture to ChatGPT. It records it.
Yeah, there's a lot of things in
Extract
ChatGPT people don't know. Like
Yeah, gives
the
me-
one big thing that is really important in ChatGPT is the way you structure your questions.
Yeah, the prompt engineering.
So the prompting is the most important thing you could possibly do when you use ChatGPT.
Oh yeah.
I'm gonna start using it now.
Well, the thing is everybody's like, I mean, we're so used to like computers kind of being stupid, and unhuman like, to where it's like, oh, we don't want to overload it by giving it too much detail, and so you go with a very vague question, and then you get frustrated because it doesn't give you the answer that you want because you asked too vague.
Yeah.
And with this, it's like if you engineer the question of like,
Be specific.
like what I mean, we were talking about it before. Is like you want to say, what you expect out of them, of like what role
you want them to
position
say,
would
that
they
you want it to
need
be an expert in. So I want you to be an expert in this and be detailed in what you want them to be expert in. The background of that role like what that role does specifically, and then what you want it to accomplish. Is really what people don't know, and they just structure the question is, give me this. What is this? What is that? Or write me a script for this.
Yep. Like you could just say, give me a grocery list, and it's going to give you a half-ass grocery list, right? Or you could say, I am currently walking into Aldi's.
But you can also say, answer this as if you are a experienced nutritionist in the fitness industry that has 20 years of experience, 30 years of experience, and has their doctorate. And then here's the background of what a nutritionist is. And then ask your question, and then also ask, please ask me any follow-up questions that'll help you give me the best possible answer. And then it always asks you usually probably 6 questions, and then you re-answer those questions, and then it gives you the answer, and it is always the highest level of answer that you
So
can get.
nothing sponsored.
No,
Love it.
no, nothing.
Exactly.
Love it. It solves
You don't
that
gotta
problem.
worry about that.
Solves that
You don't got to
problem.
worry about the sponsored
Yeah.
websites.
Hey, good Lord.
Flooding
Raw
you with
data.
wrong information.
That's what
right?
we're looking at.
Yep. And it'll give you
Well, I'm looking at when I go. And all of a sudden, I can get rid of those damn
Yep.
things.
It'll give you sourcing for it too, and then at the end of the week, you can even be like, give me a PDF of like a breakdown and like what to focus on next week. Where should my focus be?
And if you're going to use digital communication, it is one of the best things to structure yourself as the expert. So if you put the right information in, you have it structure your rebuttal. So like there's some people in this industry that just use digital communication when they do rebuttals with underwriters or with anybody, which again, we talked about earlier, you should be using the phone.
Right.
But if you are one of those people that just can't verbalize what you need to say to somebody, you're going to want to use that to create and structure your email and your rebuttal. And then it'll take that email, restructure it, and put together some of the best rebuttal emails for condition overwrites, anything. I mean, you can tell it to become a marketer. Like you can tell it to in detail what type of marketer you're looking for. Yep. It'll be that marketer and then write all of your email responses, all of your auto email responses, all of your text responses, all of your auto text responses. So you can literally have everything pre-created. And if you don't know, you can create signatures for all your responses so that you can just drop it down and then just change the information in the email. And 90% of the email is already put together.
Yep.
So that's one of the things people don't realize. You can do that with text too. You can save text. You text yourself and then save all those texts and just copy that text and post it and send that text and just change some of the information to that person. So you can have all of your pre-responses or pre-set texts that you send to clients or anybody you're looking to network with or do business with in your email, in your text body. And you just text it to yourself and just save them all there. Or you can do that with emails, just creating signatures.
So I want to increase my obviously social media presence, branding, right? Using that to gain more business. So I asked it, and I was like, okay, coach me on do that. Be my marketing coach for me. Develop me a plan, schedule of like the next 8 weeks of like what I should do, and what goals I should be working to obtain. And it created me an ICS file, which is an Outlook calendar file that you can just drop into your Outlook, and it scheduled my calendar for me.
No.
Yep, for 8 weeks, just boom, boom, boom. On noon, well, it was like different days of the week, depending on different trends.
You share this.
I know. I'm
share this, or
learning.
this-
This is great. I'm literally going to use it tomorrow, tonight.
Yeah, I'll give you my email address.
That's awesome.
It literally is like, okay, on Tuesday, this is the best time to post. On Wednesday, this is the best time to post. And none of the days are the same. And I don't.
Or hours?
Do I really know why? No, but it does. So it will tell you, like, literally at this time, and it set a scheduled reminder in my email. On this time, you need to post, like, a new video. Or on this day, you need to post an infographic. Like, this is the peak time that people use these different social media platforms. These are when you need to post it. It's interesting.
That's fantastic.
Yeah.
Yeah, it's crazy stuff.
I need more content to be able to do it effectively, but
it tells you how to film, what to film.
now I know where my deficiency is.
You can literally make videos like in video, and you don't even have to be in them. I mean, it took me. So I'd use ChatGPT to create I was helping one of my girls' brothers out, and I had it create. He was like, I don't know how to make videos and stuff like that. I was like, one, just, film normally with, he's like, I got a GoPro. I was like, use your GoPro, film yourself doing stuff during the workday, and then you can either do the voiceovers or you can utilize a third-party company to do the voiceover.
Right,
You can use AI.
Mm-hmm.
You do an AI voiceover, so you can utilize that. And I was like, and then you're just going to want to create some basic content videos that have just using graphic arts or graphic videos that are available on, through AI. And he's like, what? I was like, watch. I said, give me the top 3 remodelings, things to do, top 3, ways to remodel your home, blah, 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 blah. He gave me the script. I took the script, posted it into, another company that uses AI, and it made a video with overlays, with the captions, closed captions all over it. Yep. And I did it in like 2 minutes. He's like, you just created me a video that I could never think about creating in 2 minutes. I was like,
that's awesome.
Wild.
Is this the free version?
Any version? Everything's free, but the amount of times you want to use it are limited.
Got it.
So if you use the free version, you get less actions. That goes for any of these things. It only create a certain amount of videos for you. So if you're a heavy content creator, if you want to do like it's supposed to, 3-4 times a week, you're gonna have to do the paid version. But the paid version's like $20
a month or a year.
Things are like thousands of dollars. These are only like $20 a month. You know what I mean? So you're gonna get way more out of it than you could ever think of.
$20 a day would be fine.
I mean, you're gonna make, if you use it, you're gonna make more than that.
Make money, it's gonna make money, yeah.
Right.
The thing about us is like, the hard thing for social media is like, you don't get a ton of business from it that can be quantifiable. So no one's gonna apply on your online Facebook link, or no one's gonna apply on your online Instagram link. So you're not gonna be able to quantify, okay, that came from social media. You will get business, but it's not trackable. It's not, you can't say, okay, this is what it's hard to track the return on your investment.
Yep.
You just have to know that you're doing all this work, and now you get
moving forward.
you'll be able to see your business grow, right?
Right.
It's going to take you multiple times, but you can't say Tom came from social media and you came as a referral from a referral partner. It's not going to happen. It's going to be tough. You'll be able to get a few, but you won't be able to realize, like, there's probably people that that are all over your friend list, have no clue Dan does mortgages. Same thing for you, same thing for me. I probably have friends that don't know I do mortgages.
I have that happen to me.
I had a guy that I've known for years. Years. I went to one of those networking events. He's a realtor. I'm like, you're a realtor? And he's like, you're a mortgage guy? And it's like, because we don't use content.
Yep.
Like, there's plenty of years that we did. We don't brag enough, I think, about volume. We've never been that person. I mean, we were doing $100 million a month, and I never said a peep. You didn't even see me online. Mm-hmm. I didn't get online and go, hey, we just did $100 million last month. Do you know what I mean? Like, that's ridiculous volume. People are pimps right now if you do $100 million a year. Do you know what I mean?
Right.
We were doing that in a month, and I was never online. Like, look at us. Look how good we are. Like, it's just not my nature. I've never been that guy. I was no lineman. I mean, we don't brag. We don't even really look good on the field. We just block. We're the reason you win, but we don't talk about how good we are.
Right.
So by nature, I don't do that. And it does hurt us because people don't know. We're not out there saying how good we are. So realtors don't know how good we are. No one knows that I've managed capital markets. No one knows that I underwrote files. No one knows that I managed underwriters. No one knows that stuff. No one knows that you're a loan officer. You use Encompass. I programmed it. Like, no one knows that because I don't like to brag about myself. And that goes for you guys. No one knows how good you guys are because we're not doing that enough. And I agree, we do need to start doing that. And that's where social media is huge, is because people will realize how good you are.
Because I was golfing with the guy.
Correct.
Yesterday. I've known him for a long time. We've known of each other for a long time. We say that. I know him more now. I just sat there and listened to the story about the house he just bought, blah, blah, blah. And, I didn't even say a word yet, but it's what you're saying.
Yeah.
I mean,
it would have used you if you knew.
Yeah. Or even use me for questions and down the road, because by the way, he buys multiple houses, so I don't know, who they use or who they don't. But the reality is, there's value to using me. Whether even if it's just a question.
Yeah.
Call me about a question, I'll answer it for you.
That's why it's best you get on there and you give information,
right?
And you talk about what you do, knowing how good you are. Some of the people, and that's their process. I think that some of the people like to do more funny, more goofy type of content.
Right.
But then, would you want your doctor doing that?
I know. Right.
Would you like to see your surgeon, dancing?
Yeah, I don't want to see my my doctor right before surgery.
You don't wanna-
He's like,
you're not
he's
gonna
like,
pick
hold,
it-
hold,
'cause
hold
you
on
gotta-
one second.
Yeah, I gotta film a TikTok.
Yeah.
And then he dances
New
with you in the
TikTok
background.
trend.
It's
I'm gonna do a
different.
dance. Yeah.
Again,
No.
that's we could be wrong.
Right.
I'm more than welcome
Yeah.
to be wrong. I just don't feel as if, and you guys, that's up to
No,
you
I
guys.
feel the same
but
way.
It's because we are professionals.
We have been, yeah,
and
yeah,
we know
exactly.
what we're doing. It's not. I'm not here to tell you that. Hey, use me because I'm funny. I want you to use me because you want
at
to
what I
be.
do.
You're good at what you do, and you want to be informed, and you want someone to take care of your financials. You know what I mean? So
Yeah.
Solve problems, the whole deal. Yeah, everything.
correct.
They're right. And I just recently read there's a study that 60% of your client base will Google you.
Yep.
Before determining if they're going to use you or not. And so having that strong social media presence is basically what they're looking for, which I think is interesting. You know, just because it's like a
Well, and that-
very
I mean-
big shift.
How many of us, even at my age
Mm-hmm.
or older, watch TV on their phone? I say TV because I'm an old guy.
Yeah.
But watch their phone for. I get lost in mine sometimes at night when I sit down.
Yep.
I don't even turn my television on, and I sit there, and all of a sudden I've watched, some seal jump on a boat, running away from killer whales. And but it's funny. I'm watching comedy stuff. Again, though, that's more and more, and that's some of my age. Being this guy,
Yep.
let alone people like my daughter doesn't even plug. Her cable box isn't even plugged in.
Yep.
And has never been plugged in.
Yep.
Yeah.
Right.
Yeah, send that thing back.
Sits there. Right. No, I keep it there because one day she's gonna.
One
ask
day she
me.
might want to watch it.
Hasn't happened yet.
It's crazy, right?
Yeah.
Yeah, I don't watch TV at all.
I don't either.
No one really does anymore.
That's what I mean. Right.
No one really does.
Yeah, I don't even have cable at my house.
Yeah, and there's lots of studies out there. What do they say about statistics, though? 100%. What is it? How does it go? Like 100% of statistics aren't always right? So it's
Yeah.
like 100% of the time. I mean, there's a lot of statistics, but it's like it seems like everybody's more apt to social media, and the more I notice is that more people are getting their information from social media. More people
Well,
are getting
and
their
it,
stuff from
and it feed,
on YouTube.
right or wrong. If you're looking
That's
it
the
up,
hard
it's going to
part.
feed it to you.
Yes.
We see
know.
see stuff all.
Yeah.
I mean, there's a lot of people that are considered experts that say stuff wrong,
Right.
including myself. I'm sure I've said something that was incorrect.
We had
before,
the
too.
conversation earlier. Yeah, it happens.
Yeah, it happens all the
We're all
time.
human. Yeah.
But
So
as long as you don't speak it indefinite, so like, there's no way we can do this as dead. If you're willing to put the effort in to find out, that's the difference between someone that's very successful in this and someone that isn't. Is like, even if you believe in your soul it's dead, still try to figure out how to make it work.
Yes.
It's called
Yeah.
life.
well, and that's what we talked about earlier. Is just,
Loans in general.
Some people they'll just move forward and that's it.
Some people are like, no, I don't want to.
Yeah.
This,
And because by no fault of their own, sometimes the reality is again you have to know so much.
Dude, I've gotten loans dead that when I first fixed loans that were dead, in my head, I'm like, this is dead.
Right.
But we've saved loans that way. I know I have. I'm sure you guys have too. But I've saved loans where I was like, this is dead. There's no way I can get this to work. And I could easily have quit there, but then it's like, all right, now I'm going to figure this out.
Just like, that one we just
talked
about,
about,
with
yeah.
with the house and the manufactured
parcels,
home.
yeah.
We're like,
This is going to be
Oh.
tough.
Well, I want to be.
You know,
I want
because
to. I want to
they
be
brought me
careful
that
and not be the garbage man.
It's correct.
You know what I mean? I don't want to be the garbage man just because I can.
Yeah.
And no disrespect to the consumers I'm talking about, but the reality is, oh no, this guy's got 20% down. I'm going to send this over here. That doesn't always work. There's more than just down payment. There's more than just credit. The property itself. There's so many things that can go wrong. But again, if you trust me with, and I don't mean to be disrespectful, but I say it that way, as the garbage man, feed us a bone too. I use this one over here for my, my 20% downs, and this guy over here for my, 3% downs.
Yeah.
And fortunately, most of the realtors I've worked with recently, I'm not just that. I
correct.
get every call.
Yep.
Everybody I know.
Once
they
you get
trust
in,
you.
yeah, you're
Yeah.
correct.
Yeah.
Everybody has somebody. Some people that I know have 3, which is fine.
Right, that's fine. I encourage it.
Yeah.
Yeah.
As long as you make one of you guys a 3, it doesn't
Right.
matter. But, I agree. Some people have different people for different things. You should try to find the one that can do all of them.
Yeah, that's what I'm saying. Exactly.
But I mean, so be it. As long as you're in the shed, right?
Right.
That's all that matters.
as long as you're in the shed.
One of the tools.
That's it. One of their tools. But yeah, I mean that's basically important. So with this AI stuff, you have to use it. It can do anything.
Well, and
script anything.
It's in its infancy. Imagine what's going to happen 5 years from now.
Well, the hardest thing about you is you probably don't know your own brand. I know that's a big thing with people. Is like even myself, I don't even know. Like I don't
No,
have.
I'm with you.
It can help you write what your brand is. Because if you don't know what your brand is, you don't know how to tailor yourself. Not everybody's good at everything. Like I suck at some things, and I sucked at some things in the past that I'm better at now. But you have to know your brand. You have to know what your strengths are, and you have to create your own brand. Because if you don't know your elevator pitch, who's going to want to work with you? Mm-hmm. Right? I always tell people, like, you could have the best thing. You could have the cure for cancer. But if you can't market a network, no one knows you have it. Mm-hmm. Right? So you have to be able to do that. Yeah. So that's the one thing that AI can help you with is definitely, the one thing you should definitely use it for this industry is your brand. You should put all the information, all the stuff you do, all the stuff you think you're good at, all the things you think you're bad at, and then say, create me a brand. Because that's your pitch. That's how you get people to want to work with you.
And I don't mind. In fact, I want to build on that because I don't mind when people tell me what I'm not good at.
Correct.
Because then I can accept it because you can't be great at everything. It's impossible. There's too much to know, too much to do. So I think that hopefully we can, as a team, get together and critique each other. Yep. And then that way we can
get better
at it. Correct.
Yeah. Then it's also good, one, to get better, but you also want to surround yourself with people that are good at what you're not good at.
That's my point. And that's what we're talking about, using the AI.
Delegation is key. People don't realize that. If you can't delegate, then you're not going to be successful. It's tough. You know what I mean? Delegation is always everybody's issue, though, that wants to do well.
Yeah. I can't wait to use AI tonight. I'm using starting it today.
But you can use it for anything.
Everything.
Yeah.
Everything. Going forward, man. Like, it's going to plan my week next week.
Anything.
You can have a widget on your lock screen on an iPhone with it. Just use it
hit
all
it.
the
No.
random stuff.
Don't say it like that. Don't say you can. Say, I'm going to show you how to put a widget on your iPhone.
Ask ChatGPT.
And it's all verbal. You can talk to it.
You're going to show me.
One thing,
my iPhone's right over there. You're going to show me before we walk out of here.
AI texting and AI voices are there. I don't know if you guys have looked up some of the stuff that
AI voicing.
Like you can it'll make a full phone call and conversation, and it just calls it your virtual assistant or they call themselves they'll be like, hey, this is Deborah, Dan Fonseca's virtual assistant, giving you a call and literally that's all they have to say, and then they have a full conversation with voice inflection. If you ever want to see how crazy it is, look it up online. Wild. We use it right now with some of the realtor partners we work with. They have it, and they'll make phone calls and it'll text and it'll have conversations legally because it has to announce itself. But it'll have a full conversation with a borrower and then schedule an appointment or live transfer it. It can be your own. It's wild, and people don't understand it because they're so like I'm old, man. I'm 48. Tom, you're 54. But if you don't keep up with the times, you're gonna get left behind. Like, and it's gonna go so fast. People don't realize how fast it's gonna go.
Well, that's my point.
It's gonna go from right now to like 5 years from now being wild.
Yeah,
if you're not ready for it
now, before the people that have trained themselves on it for the past several years, 5 years from then, it's like that's gonna be way too late to just figure it out.
Yep.
Yeah, I mean, it's like embrace it or you're gonna be left behind.
Yeah, because
you'll already be behind.
Yeah.
I mean, obviously, if you're young coming into it, you learn it. But
6 months from now, you'll be behind.
If you don't get on it now, you're in trouble. I mean, you should have been on it, 6 months ago. Right.
No better time than present.
Just got to get on it.
Start today.
It's wild.
No better time than present to get on it.
It's the new internet. So this is our end. When we were kids,
I love
they
the fact
came out
that
with
it's the new internet. I don't have to say, hey Siri, what's this? And they give me some advertising thing, or hey Google.
You didn't even do that. You literally ask it the question. You say,
that's what I'm saying. I'm going to go straight to that.
You push the button and you say what you want.
Well, it's going to be very easy because Spencer's going to put that on my phone. See? There she is over there.
Yeah.
Was that ChatGPT?
You're obsolete.
That was, hey Siri. They're integrating. No, they're integrating it with. Okay. They're integrating with ChatGPT.
Yeah.
But you're going to put the widget on my phone before I leave. So if I'm at the Cleveland Browns game, I have a question. I'm going to ask ChatGPT.
Wow.
Yeah.
Wow.
Yeah, be like, what when they start allowing that in football?
You can do anything.
Pop right up.
Anything. Yep.
I mean, I think it's going to be crazy, especially like some of the like future applications of it.
But you should be using it for everything. How to organize your CRM, how to organize your lead management system, how to create a lead management system, how to create a calendar for your day for success of XYZ, whatever you're looking to increase your anything from fitness, business. But if we're strictly talking about business, you should be setting up your calendar for filming, your calendar for posting, for social media, your calendar for work, your calendar. Because I'll give you stuff. We have a ton of stuff I've given you, but you can use whatever you want. There's a ton of stuff out there for other people's, and you can use ChatGPTs.
How many of us here have kids?
Right.
Or grandkids?
Yeah, right.
No, it's not just for us. It's for anybody in any industry. It's going to set them apart.
Well, that's the thing. I don't know if you ever, you know Rob Deerdick is. You ever see that stuff about him?
Oh, yeah.
He works so efficient. His whole day is scheduled from the time he wakes up to the time he goes to bed, all the things he does with his kids. And he only does those things during those hours, and he works less hours but gets more done because you do that. Because think about your day. There'll be points in your day where you finish a task and then you don't do anything else. Or you half start a task, stop it, and then don't do anything. That being said, like if you put in those hours and you only work those hours, you could work a 5-hour day and probably get more done than someone that works a 10 or a 12.
Oh, yeah.
The issue is just you don't have tasks set up in the day. And the other thing is you work too long on a task.
I would rather somebody structured it like that, or something structured. Let me say it that way.
The other thing that everybody says and no one does is you're supposed to plan on Sundays. So like they say is if you put some planning in on Sundays, if you put like 30 minutes of planning on a Sunday for what you're going to do during the week, it'll equal like 3 hours of planning during the week. If you just take a little bit of time on a Sunday and pre-plan your week, it'll set you up for success. And a lot of people don't do that. You should literally have your calendar set when you walk in on Monday, because then you have intent, you have a process, and you have a plan. It's as simple as I learned that in college football when I was, at Youngstown. You don't just come in and say, all right, everybody, we're going to practice football today.
Right.
You know what I mean? Let's practice.
Let's figure it out as we go.
You know what I mean? It was set. They had the whole week's done, all the periods that we would practice, what we would practice. They knew the plays they were going to run because they planned it. As soon as that game ended, they planned the next week.
Yep.
And that's the thing is like Saturdays and Sundays should be your planning grounds. I mean, you don't have to work the whole Saturday or Sunday if you want to work life balance.
It doesn't take long to plan.
Yep.
Yeah.
By the way, did anybody see the ex-CEO of Google? It's all going all over the place on social media.
No.
Because they asked the ex-CEO of Google, why do they think Google fell behind? And they're not really leading the AI space when they were one of the people that started AI.
Right.
And he said, it's all online. I'm going to paraphrase it all crappy, but he said, because Google found it more important for people to have a work-life balance and be more happy at work and have less time at work than they found profits important. And so now they're behind. And that's what happens with companies and yourself. So you have to be prepared for that. So you have to figure out, okay, what will be my success? How much success is enough where I can start focusing on different avenues? But the more you focus, it's obvious. I mean, the less you focus on the gym and eating right, the fatter you're going to get.
Yeah. Everything. It's life.
It's life in general. And so you have to figure out, okay, I want to be X. Your X may be different than my X. So your work-life balance may be more than my work-life balance, or vice versa. Mine may be lower. But you have to figure that out first. Because if you think that you're going to be highly successful working less, I mean, it just doesn't make any sense. So that's the things like when you're scheduling your week, you have to be like, all right, here's what I want to accomplish this week. And it may be more than, 15, 20 hours. It may be 30, 40, 50 hours, 60 hours. That's something you have to figure out. And that's why that scheduling is really important. Because one week you may have to focus on kids or taking a vacation.
Well, that's what I was going to say. We're all in different phases
in life. You just got to pick it up the next week. But if you have a plan, you can pick it up the next week.
Yeah.
There's one practice may have been a little bit softer. You're not going to go hard the day after the game, but you're going to pick it up at least 2 days of that week.
Right.
Yep.
So that if you plan your week, okay, I know Tuesday, I know Thursday I have to go to this. Right? So I know Thursday I can only work this. Well, I have to pick some of that time up I'm going to miss on Thursday. Monday, like Tuesday, when we left me and Tyler went to Chicago Thursday and came back Friday. I mean, I had to work all day Friday, all morning. This morning I'm going to work after we leave here, and I'm going to work a little bit on Sunday. But that's because I have to make up for what I missed. That's how you guys and all of us have to do it. That's everybody. I mean, you guys get that. You do that now. But I'm saying that's what people don't do enough of is they don't plan their weeks out based off of, the hours they have
but
to
now
work
you're
for
saying
success.
even that this
ChatGPT?
AI
Yeah.
can actually schedule it for you.
Yeah, we'll do it. You just got to tell
Yeah.
what your
That's what I mean. What your
your
goals are, what you want,
You got it.
and what you have to do.
If you prompt it correctly, it'll give you a whole calendar.
Right.
And you can do that on literally do it on a Sunday right before the week and say, "This is what I want to. This is what I want to
don't
do. Here's
know
what I want to call."
everybody else, but you get up and you make breakfast, you clean your house on Sunday. There's certain things you do prior to, whatever goes on in the day.
Yep.
Has to be part of that.
All you gotta do is just tell it what you want to accomplish next week,
Right.
what you want to do. Here's my goals for this week. Create me a calendar. I want to work this many hours. I want to start at this time and end at this time, and it'll put it all together for you. And then it's just of course, ideas are great. Implementation's the most important part.
Right.
Follow through.
So then you just follow through with it.
It's fantastic.
Yeah. Then it's the
But that's what I was saying. I think we all are, but myself for sure. If you're honest, like you said, with practice, obviously I can relate to practice.
yeah.
You show up at practice and it's this. Not show up to practice. I relate to going to the gym right now, this phase of my life. I go to the gym, I read what I'm going to do. I do it. X, 5 sets of 12, 90-second breaths in between, whatever the case may be. Read it, do it, leave. But I accomplished exactly what I wanted to. Mm-hmm. Versus show up at the gym and go,
What am I going to do today?
well, okay, I think I'm going to do some chest today.
I know. I have 2 different gyms.
If I go to the gym and do that, I'm more of a robot at the gym. I want to be more of a robot at work because I just put the music on. I don't look at anybody. And I just read what I got to do, and I sit down to do it. Half the stuff I have no idea how to do it. I YouTube it. I watch how to do it, and boom, I do it. But it's but being successful at doing that is the same thing. Being that this ChatGPT can create, being the same success, and you're taking that into your work.
So ChatGPT can be a business coach.
Yeah, that's
It can be a
exactly
fitness
it.
coach.
Right.
It's one of the things that I failed at in the beginning of my career. I was more of a football coach than a business coach, which I'm trying to convert more into. And when you try to yell at people and try to be a football coach, it doesn't do well.
Right.
Especially when people, just aren't ready to succeed yet. They'll fight you harder if you force them down that path. Mm-hmm. That's the hardest thing. Is like in football, you sign a contract that you're gonna get. It's like the military.
Right.
You're gonna get smoked. At least back when I played. And they're going to push you. You're going to throw up. You're going to run your butt off, and they're going to push you to success. And you can't go anywhere else. Now you can. It makes it tough for these coaches to go to the transfer portal. But in life, I think the coaching aspect of management is the best way to manage somebody. If I'd have known that in the earlier part of my career, I'd have been, it would have been better for me. But the one thing about, and the reason I'm bringing this up is because now ChatGPT can help you coach the people you manage. So not only can it help the people that work for you manage their day-to-day, but when you do manage people, you can use it to help manage the people you manage. So there's other aspects of that. It helps you parent if you want to set up things to do. People don't realize that, because if you get emotionally attached to anything, and I always tell people this is the hardest thing for loan officers to understand, is when you're emotionally attached to fixing that file, you're going to say stuff that makes no sense. None at all. And that's why people that have no emotional attachment to the borrower is always a great person to bring that file to help you. Because emotions are in a different section of the brain. This is where emotions live. This is where cognitive brain function lives. So it's very hard to figure a solution out if you're emotional. Mm-hmm. So some people have the ability to remove the emotion. And that goes for planning. So if you have a good plan and it's not emotion-based, so if I'm coaching Spencer and it's not emotion-based, like I don't care about if Spencer fails now because I used to. Like if you're on a practice field and someone misses a block, you yell at them. That's football coaching. I just want to win on Saturday. So the goal is to measure Spencer's movement at the end of the week before game day to make sure he did what he needed to do during the week instead of every single action because Spencer's going to make mistakes.
Right,
You're
we're
going
all
to make
going
mistakes.
to.
You're going to make mistakes. I'm going to make mistakes. And every time you make a small mistake, if you're getting beat up over it, it's going to be hard for you to focus on the next step.
Well,
And that's what
people
parenting
shut
is.
down.
That's parenting as well.
Yeah, people should. They're listening, but they don't hear you.
Correct. And that's fitness coaching, parenting, anything. So that's the other aspect of this whole thing is it can help you. It's crazy. It can help you do structuring different things to correctly discipline or have good interactions with your kids or things that your kids like, you can literally pre-program it to help you parent better. You can help it to coach better, manage better.
It's funny you say that about parenting because none of us are experts at parenting.
Nobody is.
You know what I mean?
Just give you a kid and say, go home.
Give you a book and tell you how to do this.
Ain't no book.
Yeah, I know.
That book don't know. That guy barely had a baby.
I've had to tell people that you take your book and go home. How's that?
Right. But yeah, so that's the other benefit people don't realize is like if you're a manager out there and you're not using ChatGPT to help you to manage your people better, because everybody's managed differently. So like I need to take your goals, your interests, what you're looking to accomplish, and then create a plan for each person separately. You know what I mean? And you can still be successful in any aspects of mortgage, even call center, if you do it that way, let alone purchase. Because people have goals, and if you help them accomplish it, they're going to be more apt to be on your side than anybody else.
Forward with you. Yeah.
Yep. There's some really good loan officers that have left other really good people because they just didn't know how to coach them, and they did this.
Butted head versus, yeah.
Because they don't match up. So that's the other thing that it helps you a ton with. A lot of those, the disc wheel where you do the I think it's called disc, right? Disc profiles. You can use disc profiles and use ChatGPT to make a plan for people that work for you. So if you have them take the disc profile, put that in ChatGPT, then also put together, I get all Spencer's goals and everything and put them into the system. It'll say, okay, this is what you need to do, Spencer. It's just another way for you to get good information on how to help somebody be successful. So, including just for yourself.
Right.
Yeah. All right, man.
Yeah,
Well,
that's something we build on for sure.
yeah. Cool. Well, it was great talking with all you guys.
Yeah, thank
100%.
you. Yes.
Yeah, thanks for having us.
Invaluable.
Yeah, for sure, brother. All right, thanks.